To bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with.
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. This is Mahima Vajrajani and I'm Alex Matthew, and we'll take you through the next 1 hour of trade. And if you've got questions for us, and there are so many stocks that are buzzing in trade, so many stocks that are probably moving in your portfolio, you can call us or you can send us a message. The numbers are flashing on your screen. But before we get to that, let's take a look at how the markets are faring right now. And it's been quite a bit of chop and churn. In fact, let's pull up the intraday Nifty 50 chart, and you are currently at 24,645, but all through the session today, it's been a range of about 150 points or thereabouts. The broader markets are looking more or less sanguine, and it's also been a very tight range. So right now you have the mid-cap index that's trading with gains of about 1/3%, and similar gains for the small-cap indexes as well. So overall, the market breadth is nothing to worry about. It's looking okay. Of course, there's a little bit of caution in global markets as well on account of that US CPI number, which is being watched very, very closely. And overnight, the handover was not the best from the US equity markets, with cuts of about 1/3% or so for those benchmarks. Of course, in the Asia Pacific region, the factors that are at play are slightly different, with focus on China and whether any details will emerge on the fiscal stimulus there. So let's take a look at the sectoral picture, because that will give you an indication as to how things are looking right now. And it's not a terrible picture, because you have more gainers than losers, but not tremendous gainers. Metal, on account of that China story, which we've been speaking about this week, is the biggest gainer. It's up about 1% or so for the pack as a whole. The loser in today's trade is the Nifty Bank, which is down about 1/3%, and the PSU banking pack, which is also down about 0.2% or thereabouts. But there are a few interesting stories, and particularly in the sectors that Mahima tracks. In the FMCG space, of course, there was a note by Goldman Sachs this morning that talked about Avenue Supermarts, and they've cut their target price by a whopping 10%. They already had a sell rating. But my point is, okay, first let's talk about what are they saying. What are they saying?
So basically they've maintained their stealth stance on Avenue Supermarts, and they've brought down the target price to 3425. Now they're saying that, so basically I agree to what they're saying.
What are they saying first?
So they're saying that, quick commerce right now, if you see Zepto, even Blinkit, Zepto has now a new feature called the Zepto Big Saver, which is kind of competing with DMart prices. There was was no other competitor for DMart when it came to pricing. But now these quick commerce players are competing DMart even in terms of its pricing, which is why they're saying that DMart is increasing price discounts to maintain competitive advantage, and they've come down to 25% of discounts on their MRP, which is kind of going to take a lot of hit on their margins going forward. And they're saying that DMart overall has an addressable, overall the grocery addressable TAM is $500
TAM
billion.
is what?
$500 billion.
No. What is TAM?
Total addressable market.
Sure.
And they say that DMart's addressable is only 1/5 from this because they don't cater to rural, the intoxicants category as well as the meat category. And DMart has grown headroom beyond top 10 cities, but since they own the stores and not rent them, for them this expansion will be gradual and not at the pace at which the quick commerce is growing, which is why they've maintained their stealth stance on Avenue Supermarts.
Guys, if you've got questions on this, I would encourage you, because it's a popular stock. I'm sure a lot of you own Avenue Supermarts, and you're also probably looking at the likes of Swiggy and Zomato. By the way, Swiggy is down today on account of another reason. You have Amazon, which has announced that it is getting into the quick commerce space with Tez, and so that's certainly a talking point. Just two very quick points from my end, and then we'll talk about this. Of course, I'll go back to Mahima and what she thinks about this as well. It's not like we didn't know about the total addressable market for DMart. We knew that they didn't sell intoxicants, and we knew about the concentration in urban. And the other aspect, of course, is that there's going to be cash burn by a lot of these quick commerce players. They're raising funds and they're able to price things in a certain way. Whether or not that is sustainable is another matter altogether. But let's introduce our guests. We've got Saurabh Jain, Equity Head Research at SMC Global Securities, as well as Vaishali Parekh joining in. Thanks so much for taking the time, the both of you. First, Saurabh, I'll very quickly come across to you on what you think of Avenue Supermarts. Is it still expensive? It's down, what, more than 7-8% in the year so far?
The Avenue Supermarket, to my mind, is a laggard this year. I mean, even if the stock is down a bit from the highs, but still the valuations are on the higher side, especially when it is a case of heightened competition. I am actually using Zapto. They are even given discounts on the brands like Amul, and after giving discounts, there are options of getting even more discounts by using some credit cards. So it is a serious threat. It is a serious kind of a competition. Plus, you get all the things at very wholesale prices, dirt cheap prices at your home in 10 minutes. So this competition is actually will be tough for the companies like Avenue Supermarts going forward. Especially, it's a threat to their margins and profitability.
Right, let's jump into the queries for the day. The first query is from Supriya, who's from Andhra Pradesh. She's holding KPI Tech 64 stocks bought at 1529 a piece, and she wants to know as to what could be the target price and the stop loss from a shorter term perspective. Vaishali, your view on this particular counter?
Hi, very good morning all of you. So I think KPIT is on a trending mode. Near-term target resistance one can see at 1600 levels. So I would say continue holding. And if it's from a trading mind frame, 1600 is the level to look at for booking profit. And if it's for a positional long-term trade, then I think wait it out, because if it sustains about 1600 levels, we are back on track to look forward to targets like 1750 to 1800.
I'm coming back to you, Vaishali, on Dixon Tech, which is the next counter that we're looking at. Sridhar from Vijayawada in Andhra Pradesh is asking for a short-term view on the stock. What are the price trends that you're seeing, and would you suggest a fresh entry?
For an aggressive trader, because it's already in an overbought zone, so I would not prefer. But having said that, there is no damage to the trend. The momentum still looks quite positive. So for those who want to get into the trade, I think 17,400 should be the level to look at as support, and look for a target of around 17,800. That would be the short-term strategy.
Right. Padma from Bangalore is writing in for the next question. Her question is on NTPC Green, and she's asking whether is it the right time to buy or enter into NTPC Green at current levels, and what could be the target for the next 2 to 3 years? She applied for the IPO, but unfortunately she couldn't get it. Saurabh, I'll come to you for this one. Your view on NTPC Green?
I think it is quite up from its issue price, and to my mind, it was a muted listing, a muted kind of a listing. It got listed even close to its issue price only. The issue was not cheap. I mean, it was one can say it was expensive, and now it has become more dearer with the good news following in, because the company is getting some orders. Today is also it's up. From the next 2-3 year perspective, yes, it can be a hold, but one should accumulate in a gradual manner. I think one should buy on dips, wait for corrections in the market.
Navendu Sharma is calling us from Mahima's hometown of Ahmedabad. Navendu, good morning to you, and thanks so much for calling us. You're our first caller today. How can we help you?
Good morning. I'm holding 500 Godrej Agrovet shares.
Right.
For the last 2-3 years.
Okay.
Bought at a price of around 450.
Okay.
So what should I do now? Should I book profit, or can I expect a steady rise from here onwards also?
Okay. Navendu, when you bought it, did you buy it from a long-term perspective? Obviously you did, I guess, because you've held for 2 years. But are you comfortable holding for another couple of years or more?
Yeah, no problem. I can definitely hold, provided the prospects are okay.
Understood. So you're trying to gauge whether the fundamentals are looking good for the stock and whether you should continue to hold it or maybe even add more. Is that right?
No, I'm not looking to add more, but I can hold my present holding.
Understood. And you're making quite a considerable gain also in the stock. So let me take this question to our fundamental expert, Saurabh. Saurabh, he's making a gain of 1,65,000 in this, and he's had patience to hold for 2 years. You got the question. What are the prospects?
I think the last quarterly numbers were down both sequentially and year on year, and some kind of a disappointment was there. And so we are seeing the stock languishing for the last 3-4 months. By and large, the stock has given return, and I think since we have come up to the end of near the end of December, I think we should wait for December quarter earnings. If the company does show performance, then it makes sense to hold. Otherwise, I think it will be better to exit. Wait for the numbers to come up.
Right, that's the view coming in on Godrej Agrovet. The next query is on Idea Forge. This is from Prasad, and he's asking, and he's from Malaysia. Okay, so he plans to make a new entry in Idea Forge, and he believes that valuations right now are attractive, but bullish on drone. Okay, so he's bullish on drone theme, and he believes that Idea Forge valuations are attractive. Can you help suggest the entry levels for this? So I think he's already done his funda study. Vaishali, I'll come to you for this one. Is this the right time to enter Idea Forge?
I would say yes, it's already getting into a trend. So he can start buying over here. And even if it dips towards 580 levels, 580, 590, I think that these levels also he can add more. So it's getting into a trend. My view is positive for the same.
Sachin's got a question on CEAT, and the stock has been in focus this week, remember, because of the acquisition of that brand from Michelin. And I want to see how it's done this week. If we can pull up the weekly chart and see where it's going, because this is a relatively short-term question. So it has dropped from the high point. Remember, on that day, it was up about 10% or so on Monday, I believe. And it has since then lost quite a bit of ground. Sachin has bought at levels of 3,346, so elevated levels, 17 shares bought, and he's looking for a short-term perspective over the next 15 to 20 days. On the technicals, Vaishali, what's the view?
I think the steam for now, if it's short-term, it's fizzled out. But yet, having said that, I would say keep a stop loss of 3,100 levels. And if 3,100 levels break, then I guess the momentum is gone. But till then, just continue holding.
Right. We have our next caller. Ajay from Andhra Pradesh is calling us. Ajay, thanks for calling in. How can we help you? Hi, Ajay. Can you hear me? Okay, I believe we've lost him. Let's take a WhatsApp query then. We have Sethi, Sethi from UAE. We've got a lot of international viewers, and yesterday also we had a lot of queries from USA as well. So Sethi is asking about a clarity on Asian Paints. Would it be good to invest more in it? And his time horizon is for next 3 years. And he's also saying you guys are doing an amazing job. So thank you so much for that, first of all. Saurabh, I'll come to you for this one. Asian Paints clearly did not have a good first half of FY25. Competition is really playing its role with Asian Paints. But for the next 3 years, it's a good buy?
I don't think so. I mean, the competition is increasing. The stock is trading more or less near the COVID levels when there was no demand. And if you look at the numbers, operation numbers, the company is finding even difficult to push their premium products. Plus, the entry of Birlas into the segment is again making things tougher. And I think it's a less usage of plants in the modern apartments, higher use of tiles and the glass, which is also negative for the paint industry. So, in my opinion, I think one should avoid betting on the paints, especially Asian Paint.
We've got an interesting question. Incidentally, we were speaking about this, and I think Vivek took that as a trigger to ask his question. I'm coming back to you, Saurabh, on this one. Zomato and Swiggy, he's holding both, and he's bought at reasonably attractive prices. Zomato has been bought at levels of 230. The stock is currently at 290, and he's got 2,200 shares. He's got 390 shares of Swiggy as well, which he's bought at levels of 480. The stock is currently at 520, making handsome gains. But what he's asking is, will they be able to weather the competitive intensity in the space? This is a place that has seen quite a considerable amount of cash burn. Will they be able to manage their business? And what do you think about holding both?
The investor are lapping up these companies because the cash burn cycle is likely over now, and these companies are able these companies shown the EBITDA positive levels, and now they are on the bottom line also. They are showing good growth. I mean, they are positive. With respect to the industry, yeah, I believe that this industry is likely to go. I mean, the penetration is too low in a country like India. I think more can be done. So in that sense, I think he should continue to hold.
All right, that's the view coming in on both Swiggy and Zomato. The next question is from Mahesh, who's from Mysore. He had purchased 200 Sagility India shares at 31 a piece, and he's saying that they are on an increasing trend. He's asking whether he can add another 500 stocks for long term, say another 12 months. Please suggest. Saurabh, I'll stick with you for this one because I don't believe we have enough information available on the charts. How does Sagility India look to you?
Not in coverage, can't comment upon it.
All right. Then we have our next query on IREDA. So we have the Francis. Okay. So he's from Pune and he's bought around. So he's not given how many shares he's bought, but he's bought IREDA stock at 277 a piece, and he wants to know at what price should I put a stop loss. Vaishali, I'll come to you for this one. What should be the stop loss as well as targets?
So I would say actually the rail sector already has got into momentum, and it looks the bias is positive for most of the rail stocks. So I would say 216 should be the support, or rather a stock below that would negate the trend. But look for a shorter term perspective, look for 240. And if it sustains about 240, the next target that we would look at is 260 to 265.
The next question coming from Nimesh Shah, now a regular viewer from New Jersey in the United States of America. He's asking Apollo Hospital's fundamental view for the medium term. He's been holding at levels of 7,100, so below the current market price, but not considerably. So I'm guessing he's bought it not too long back. 40 shares is what he's holding. Saurabh, on the fundamentals, what is your view on this particular counter in the hospital space?
I think it is the bellwether of the hospital space. I think one should keep on holding the stock. The company is putting up a good show, and on the operational front, the metrics are looking quite okay, decent, and the growth is also coming up in their segments. Revenue, for example, pharmacy also, in the diagnostic also. The companies keep on growing, and they have planned to add some more beds in the coming future, which will add further growth to their revenue. So in my opinion, I think one should hold on to it.
All right. The next question is from Manoj, who's from Vijayawada, Andhra Pradesh. He's holding Tata Motors 200 shares, bought at 920 a piece, and he wants to know as to what's the next 6 months view for this stock. Vaishali, your view as to how Tata Motors looks on charts and what could be the stop loss and target price?
Yeah. So Tata Motors has shown a decent corrective move, and right now in the recent past, what we've seen that the support has been stabilized at 460, 470 levels. So now 720. Sorry, let me come again. Tata Motors currently at 805. So I would say that 770, 760 has been the support base which is made right now. And once the stock moves above 820, it gets into a further conviction for a higher target. So I think keep a stop loss of 770. Once it crosses 820, you can add more to look for higher targets of 840 to 850. Start with, yeah.
Got it. All right. So that's the view on Tata Motors. Of course, by the way, I just want to take the time to tell you that we've done a deep dive on Tata Motors, and we'll have a story on the website not too long from now. So make sure that you catch that on social media as well as on the website, ndtvprofit.com. Puneet has got the next question. He's talking about CIE India, and he's got a current quantity of about 200 shares, and he's got 530 is the average price. He's asking whether it can be accumulated at the current market price of 512, which is below his buy price. Vaishali, what's the view on the charts?
You were talking about CIE. So yes, again, the similar story. We are seeing a revival in this. But right now, the level that it is at a resistance of a 200 period moving average. So this stock needs to move past 520 levels decisively. And once it sustains above that, I think he can look for a target of 550 to 600 as the next follow-on target.
All right. The next question is from Meenu, who's from Trivandrum, Kerala. She wants to know whether it's a good time to. Okay, so she's already holding 75 shares of Varun Beverages, and she wants to know if she could invest more from a long-term perspective. Saurabh, today also Citi had come out with a note saying that they had met a few investors, and investors still are very bullish on Varun Beverages with the kind of growth that the company has already seen. But your view as to how one should play with Varun Beverages?
I think it has always remained expensive on the valuation side. It has always got premium on the bourses. With respect to the beverages business is seasonal, but the company's added more products to its line, and they have expanded almost all the region in pan India. So they have chips now, and the beverages. Beverages are expected to do well with the start of the next quarter. So in that sense, I think one should accumulate gradually. I think in the next 6-7 months, you can expect some decent gains.
Got it. All right, we've got a second caller for the day. We've got Vishal from Bengaluru who's joining us. And I understand, Vishal, that you want to know about Ujjivan Small Finance Bank. Morning, and what's your question?
Yeah, hi Alex, good morning. And thank you for all your insights and inputs that you're providing as part of the show. And really, it makes a lot of difference for the
I'm glad.
Like us.
I'm glad. Thank you so much, Vishal.
Yeah.
Thank you so much.
So with this Ujjivan Small Finance Bank, I had got this stock at 45 apiece, 3,750 shares. I would like to know what are its long-term perspectives, right? I thought I bought it at a period, when the Nifty banking index was on uptrend, right? Sure. And basically, I was just looking, from a long-term perspective, like an year.
Yeah.
But I see, the stock is kind of going downward. So my question is, should I add more and accumulate this, or
Vishal, just a small clarification. Yeah, just a small clarification from my end. Why choose Ujjivan Small Finance Bank? Is this part of a few stocks that you bought in the financial space?
Yeah, actually, I have quite a bit of stocks, right? I have IndusInd Bank.
Okay.
I had bought it for when it hit a lower circuit at 20%, right? So I had accumulated like 450 IndusInd. I have SBI about 1,000 shares when it hit 765 recently.
Okay.
I have HDFC Bank.
Okay.
So I have got a couple of banks. I have even IDFC, at the rate of 74.
Yeah.
So most of these banks I'm quite confident, right? I'm okay to hold them for a year or two.
Yeah.
But Ujjivan,
you're not confident.
To understand from the chart, right? Because it's below 200 moving average, and you just keep on making highs and then going low, right? So
that's a fair point, and I understand. So now, good. I have a little more context to ask your question, Vishal. Thanks so much for that. Saurabh, I'm coming to you on the fundamentals. This is a bank or rather a small finance bank that has gone through a little bit of trouble over the last year. If I remember correctly, it had issues in terms of the management exits and all of that as well. So would you hold on to this, or would you move this into an allocation to the other stocks that he's mentioned, some of them IDFC First Bank or State Bank of India, HDFC Bank?
Yeah, absolutely right. I mean, there was an issue with the management. Also, there is a problem with their book. The slippages were rising, and so the delinquencies, the NPAs have risen. I think the banks which are into the microfinance are facing trouble, serious kind of, and there is a huge amount of selling in the markets or in the stock prices also. I think there is no point in doing averaging it. Besides, banking sector per se is looking good to me. Some of the banks you have talked about, like IDFC, SBI, makes sense to hold. The other few names that I can suggest maybe is ICICI, Axis, Bank of Baroda, Canara, or Indian Bank. These are some of the banks you can look upon. See, this space is looking quite interesting, but you have to be very careful in choosing some of the leaders. The banks which are growing at a good pace, higher than the industry. They should be having pristine balance sheets. The NPAs level should be lower. Provision coverage ratios should be higher. So these are some of the characteristics which you look upon before parking your money in the sector, in the stocks, in the banking stocks. That is my take.
All right. The next query is from Hariharan, who's from Trivandrum. Now, he's holding KSB Limited, and he's been holding this since the past 2 months at an average price of 872. And he wants to know whether this is likely to surge in the near future. It's currently trading at around 822 levels. So he's sitting on some losses because he's holding around 5,000 shares. So he's saying, will it surge in the near future, or should he switch? Vaishali, I'll come to you on this one. This is into manufacturing of industrial pumps. But how does this look on chart? And if it doesn't look attractive, and if he wants to switch, what could be a better option?
So I would say that actually the stock, there's nothing much happening. There's no trend as such right now. It's only into consolidation. So keep a stop loss of 800. And I think this stock can do good only if it moves above 900 levels. So I would say that if he has to switch, I think Shakti pumps and those are already in a good strong trend. So he can consider those.
All right. We've got a long-term view. I'm not sure if we took a long-term view on InfoEdge. I think we took a chart-based view on InfoEdge. Let me go on the fundamentals to you, Saurabh. Bought at levels of 4,413. This is Naveen's question. He's writing in from Visakhapatnam. Should you hold on?
I think, in my opinion, one should hold on the InfoEdge. The management is quite confident. In the last 2-3 quarters, they are saying that the recruitment in the IT industry is picking up. They are able to garner good business. Some of their subsidiaries like 99 Acre and the Shadi business is also doing good. So, in my sense, I think yes, it's a good hold.
Okay, it's time to slip into a very quick break. Saurabh, Vaishali, do stay with us. We'll come back to you on the other side of the break to take more questions. Viewers, do stay tuned.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When and the whole day passes like a blur. The news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Long Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead.
Welcome back. You're watching Ask Profit, a show where we answer all your stock related queries, whether they're fundamental or technical. For viewers who are just tuning in, you can call us and ask your query on the number that is flashing on your screen. And if you don't want to call us but text us, you can text us on the number that is flashing on your screen on WhatsApp, of course. Our next query is from Rajan Iyer, and his query is on Jupiter Wagons. He has around 25 shares bought in July 2024. He's a long-term investor for the next 3 to 5 years, and he wants to know what could be the outlook for Jupiter Wagons. Saurabh, your view on this particular counter?
Not covered specifically this company, but yes, the sector is promising, and especially when the budget is ensuing, I think there is a lot of activity is actually taking place. So in that sense, it makes sense to hold.
Quickly, your view on charts for Jupiter Wagons then?
So as a disclaimer, we have recommended the stock today only itself to our clients. I would say continue holding, and if you want to, you can add more at these levels, because the way rail sector is doing well and is likely to do well in times to come, I would look at a target of 800 once again in this counter. So 490 as support, and buy would be the suggestion.
Okay. We've got a caller, Chandan Jain, who's calling us, I believe, from Hubli in Karnataka. Chandan, thanks so much for calling us, and the first time that you're calling us on this program, but you've been asking a lot of questions on WhatsApp. How can we help you today?
That's IPL I wanted to know.
Okay.
India Pesticide Limited. I have got in IPO at 300 rupees.
Okay. And
the CMP is 200. Whether to book loss or wait further.
Understood. Okay. And so what was the so it's up and about today, it's 5% higher. So what is the kind of time frame that you are comfortable with though, Chandan? If the advice is to hold for the long term, can you do that?
I can hold for longer term.
You
no
can.
problem in that.
So,
only 15,000 was the investment in
sure.
IPO.
Okay. So, but are you looking for a fundamental view or a technical view then?
Well, I want to technical actually.
You want to go get, okay. So let me go Vaishali on the technicals. Not a very considerable investment, and so therefore the loss is limited, but it is a considerable loss. What would you do, and what are the levels that you would watch out for?
So I would say actually the stock is showing signs of revival. Now that he has held on for so long, continue holding with a stop loss of 185. And since last 2 days, we are seeing good volume coming up. So go very gradually. You may see 220 and target of 220 to 250. So not in a hurry. Continue holding. And as I mentioned, the stop loss.
All right. We have our next caller, Debashish Ghosh from Kolkata is calling us. Debashish, thanks for calling in. How can we help you?
I have hold 1000 Paka paper. पहले इसका नाम है जॉस पेपर.
Okay.
At the rate of 18, only 18 in the year 2012.
Okay.
Okay.
Whether I hold it or sell it.
Okay. Okay. What's the time horizon that you're looking for to keep holding it?
I have already purchased it on 2012. And I hold in more than 3 years.
Okay. Saurabh, I'll come to you for this one. He's sitting on significant profits of around 3 lakh rupees already on the counter with the time period that he's been holding it. And it's an interesting space, because it's into paper molding and stuff. Do you have a view on this counter?
Not really.
All right. Vaishali, then your view on charts quickly. Should he sell it? Book profits?
I think wait, it's still showing a lot of strength today. There is volume. Sell at 350.
350, and it's quite a gain in trade today as well, 5% up. Debashish, congratulations for the patience that you've shown. We're talking about holding for 14 years, and it's a considerable gain that you've made in this stock. And once again, congratulations for your patience. Did we take Sahil's question by any chance on JK Lakshmi?
No, we've not.
No, okay. So let's take Sahil Solanki's question. Sahil is writing in from Hyderabad, and he's looking for a view on JK Lakshmi Cement, which he's bought at a price of 600 rupees per share. So he's in the green, but he's looking for a 1-year time frame. I'm coming back to you, Vaishali, on this one. Technicals for the next 1 year, what are the prospects?
Sorry, come again. JK Lakshmi, you said, no?
JK Lakshmi Cement, that's right.
Okay, so the price is currently 879. It is showing a lot of strength. I think continue holding. This stock should go towards 950, 980 levels.
All right. The next question is from Kadir Sheikh. He's holding 900 red tape shares at a face value of 2.
Yeah, but I mean, obviously.
Yeah, so he said that he got this in corporate action. He was holding the parent company, which is why he's gotten the shares at this low levels. And he wants to keep holding this from a longer term perspective. So he wants to have a fundamental view on this. Saurabh, do you cover this counter?
I think footwear stocks are actually some kind of a seasonality is there, especially when in the winter months there is a higher demand, and especially in the festive season also in the wedding seasons there is a bit of higher demand. So in that sense, I think the company is likely to post good set of numbers in the current and in the next quarter. So in that sense, it should be a hold.
I've heard some interesting comparisons. I want to know what you think about this, Mahima, because when you're talking about slipper companies, I've heard somebody saying it means that every person who's buying slippers would buy slippers every month.
No.
That's how expensive it is. I haven't looked at the valuations of this company, but I don't know what you think about the way that some people have described these footwear companies.
Yeah.
But Kadir has got the next. Oh no, we just took Kadir's question. We've got the next question on Reliance Industries, and this is a question from Shashideep. He's holding 3,300 shares at an average price of 1,340. Let's look at the stock price and see where it's currently trading. It's a loss of 1.87 lakh rupees, but he's looking for both a short-term and a long-term perspective on this. And I know that a lot of people, Vaishali, are saying that Reliance Industries is at attractive levels. But what are the technical indicators pointing to about what your strategy should be if you're seeing such a big loss?
So I would say Reliance actually a decent corrective move has already taken place. It's showing signs of improvement, like how we saw from the recent fall. Stocks are bouncing back. So talking about Reliance, I would say hold this stock. 1200 should act as a good support, and near-term support is 1230. Once the stock moves above 1350, I think it's going to go show some better upward move. So I guess hold. At this level, it's no sense exiting.
The next question is from Puneet Saxena. Now he's holding Angel One shares bought at 2,800 a piece, and he wants to know as to what could be the target for the next 15 days and also a stop loss. Vaishali, I'll stick with you for this one. Angel One.
So Angel One has already seen a good one-way move, and it's also given a breakout. So I would say continue holding with a trailing stop loss, because even on a weekly chart, it has given a breakout. So I would say, stipulated period, it's hard to tell, but we are looking at a target of 3,800. So if he has bought, continue holding with a trailing stop loss of say around 3,200 and wait for a target of 38.
Vaishali, do you have a view on options on
No,
benchmark? Okay, fine. Okay.
I don't do options.
Yeah, just checking. So that answers your question. Whoever is asking about futures and options, perhaps we can take it up at a later date. Jatin Punjabi is writing in from Ahmedabad and asking about shares of Muthoot Finance, which he's bought a few days back at a price of 1,940. He's looking for a medium-term view. Okay, this is also for Vaishali. A lot of questions coming back to back for you, Vaishali. They've stipulated that they want to know about the short to medium-term target. Bought at levels of 1,940. What's the view?
Which one?
This is Muthoot Finance.
Okay, just a minute here. So Muthoot Finance, Well, this stock too is showing an overall full finance stocks have been doing well. Continue holding. 2070 is the breakout level. So if it sustains, and we've seen good volume picking up over last few days. So if it sustains about 2070, look for a target of 2150.
Right. The next query is from Jitendra Ajay Kumar, and he wants to know whether he could enter into Patel Engineering right now or not. Saurabh, since he's not mentioned the time frame or time horizon, your view on Patel Engineering?
I think engineering stocks, especially companies like Patel, are expected to do well in the second half of the financial year, especially at this time when the monsoon season is over and the company starts getting order and the execution cycles become faster. So in that sense, I think it makes sense to hold.
All right. We've just taken Patel Engineering, and I believe we might just have a caller. Natarajan is calling us from Tamil Nadu, and he's got a question on Yes Bank, I believe. Natarajan, morning, and thanks so much for calling us. How can we help you today?
Okay, thank you. Thank you.
Yes, please go ahead.
Okay.
Hello?
Hello?
Yeah, Natarajan, what is your question? Morning.
I am holding 50 shares of Yes Bank
Okay.
at rupees 150.
Okay.
Can I hold it or sell it?
Okay. You bought it at levels of 150, so you've been holding for quite some time, Natarajan, right?
I'm holding since some 2 years.
2 years, okay.
Yeah.
And what was the thinking, Natarajan, when you bought this and the price has fallen quite sharply from that point? Did you not think of selling in between?
No, I was expecting it to rise. I hear that it has to go up.
Okay, you were expecting it to. Okay, so let me get you a fundamental view on this. Let me go across to Saurabh. Saurabh, considerable wealth erosion taking place, but restricted to 50 shares. So to that extent, the loss is limited. But what are the prospects on the fundamentals?
See, right now the stock is priced to perfection. There is nothing to lose at these prices, but at the same time, there is nothing more left on the table for his price to get covered up. I mean, 150 is a lot of distance. I think it will take maybe a decade for the bank to go there. So in that sense, I think it's his wish if he can cough up the loss or not. He is nothing to lose much. So he can hold also, he can sell also.
But then would you suggest that incremental investments he can make in some other bank, and what would you suggest that he do? Because he can probably recover the loss that he has made in Yes Bank.
I think probably what he can do, he can probably switch over to some PSU banks like names like Bank of Maharashtra, where the potential is high enough, and he can put incremental money in the bank too.
All right. The next query is from Ananya from Bangalore. Ananya, thanks for calling in. How can we help you?
Yeah, hi, good morning.
Good morning.
So I had this query regarding Capit Technologies versus Tata Technologies, which is a better one to hold for a longer term perspective. I'm holding shares of both right now.
Okay. And what's the kind of thinking as to why did you buy these two?
Regarding the semiconductor team is why I invested into these.
Very interesting, very interesting. Saurabh, I'll take this with you. Your view on both of these counters plus the semiconductor space.
See, this is the space which is of interest to investors, and both the companies, both KPIT and Tata Tech companies are good companies, and one should, if one is looking for the long term, I think it makes sense to hold both, but out of the two, KPIT is the best.
Is Ananya still on the call?
Yeah, I'm still on call.
Yeah, I hope that answers your question.
Yes, it does.
I heard you're a doctor, Ananya.
Yes.
Have you been investing in the stock market for a while?
Yeah, been there for a while, yeah.
Good, glad to hear, and thanks so much for calling us.
Thank you so much for having me, Alex.
All right, we've got Ajay's question next. Elecon Engineering is the name of the counter that he wants to know about, and he's wondering whether to enter the current market price. Vaishali, what's the view on the charts?
So Elecon also, I would suggest 600 is a better level. It's already 660. So wait for a little bit of a retracement to take place, because that would make a risk-reward ratio favorable. The near-term support lies at 580. So 600 should be an ideal level. And if he still does not want to do that, he can accumulate, keeping in mind these support levels, and look for a target of 740. So yes, the trend is positive. and accumulate.
Right. The next query is from Suresh, who's from Bangalore. He's bought Zydus Life stock 200 in quantity, bought at 1072 a piece, and he wants to know as to what could be the next target for this particular counter. Vaishali, I'll stick with you for this one, target as well as the stop loss.
So keep a stop loss of 970 and look for a target of 1030 as the next near-term target.
Understood. All right, so that's the view on Zydus Life. Let's take the next question, and we've got Ujjivan Small Finance Bank, which we've already taken actually on the fundamentals, and Saurabh has said that there are better prospects in the space. But let me still get you a technical view. Sudhir from Chennai is asking this. Vaishali, how does it look on the charts? Currently trading at 36.5.
Well, so I personally agree with Saurabh to get into another stock, but purely on technical terms, it is currently at resistance level of 37. Once it moves past that, look for a target of 40 to 44. 44 is going to be the main hurdle to look for. Once it crosses that, then perhaps some higher targets, but for now, 44 is the strong resistance.
All right. The next query is from Raghav, who's from Hyderabad, and he wants a view on Syrma SGS from a long-term perspective. It's currently priced at around 588, if I'm not wrong. If you can pull up the charts of Syrma SGS. Saurabh, it operates into the consumer durable and space, and it's a very interesting space overall. Your view on this counter?
I won't be able to comment.
All right. Vaishali, then your view on charts for Syrma SGS?
So it's getting into, it's already shown a good run up, but for a longer term perspective, even on a weekly chart, it's got into further strength. So I would say hold for a target of 700 from here.
All right. The next question coming in on Suzlon Energy, 350 shares. Ooh, okay. Wow. Basavraj, you bought at levels of 3 rupees and the stock is currently trading at 67 rupees. Despite the kind of drop that you've seen from the higher levels, you are making quite a bit of money. And congratulations on having had the patience and the ability to hold through thick and thin for this company. All right, let's get your question answered by Saurabh then. Saurabh, on the fundamentals, a lot's been said about this renewable energy space. What would you say about somebody who's bought Suzlon at levels of 3 rupees per share?
I think the management is quite confident for the business for the next few years. They have good projects in their hand. The order booking was good. The balance sheet has taken quite a change. Now the matrices are improving, and so the profitability. So in my opinion, I think it can be a good hold for the next 3-5 years.
3 to 5 years. Let me very quickly also take a view on this on the chart. Especially anything to add to that, because we've had a little bit of a wobble. I guess to a certain extent, some people were anticipating that because of the red hot valuations. But how do the charts look right now?
So let's talk about this stock because quite a few people talk about this. So 84.85 was the high that we witnessed. After that, we saw a good corrective move, and it precisely took support of a 200-day moving average. So I guess now to those who are interested, 53 acts as a final support. 53 is a very good support level, and now it's getting into a trend. And technically, if I were to say, it's making a higher bottom formation. So near-term perspective, 62 should act as a support, and on a broad base for a longer term perspective, 53 acts as a support. Once we see the stock moving above 68 and 70 levels and sustaining above that, it would show further strength to look for targets of 80 and perhaps higher. So that is how I would look at this stock.
All right. We have our next caller, Khanna, who's calling in from Dubai. Thanks for calling in, Khanna. How can we help you?
Hi, good morning to you for all the panelists. You guys are doing a great job.
Thank you so much.
Sir, yeah, I'd like to know whether, I got a Bombay Dyeing share for 200 and 254 was the price I got it. I would like to know whether to hold or sell it.
Okay, what's the kind of idea as to why you bought Bombay Dyeing in the first place?
This was basically on the fundamentals, madam.
Okay, and how long can you keep holding it?
Maybe 6 months to a year.
Okay, all right. Saurabh, I'll come to you for this one because, his idea behind buying the stock was on the basis of the fundamentals. Should he keep holding Bombay Dyeing because he's seeing some losses on the counter at present?
On the valuation side, it is quite comforting. It can be said as it can be a value stock, termed as a value stock also. There is a huge land bank with the Bombay Dyeing, which can be a trigger for the upside. Besides that, the textile companies are also doing good. So in that sense, it makes sense to hold Bombay Dyeing. So in my sense, it's a hold.
Raghavendra has got the next question, tuning in from Tumkur in Karnataka. And he's asking about CMS Info Systems, which he's accumulated shares of at an average price of 450 rupees per share. He's asking what the long-term prospects are for this company. He's in the green right now. Stock is currently trading about 100 rupees more than his buy price. What's the view on the fundamentals, Saurabh?
I think one should hold on to it. See the December quarter numbers. Besides that, the company is doing good. It was an outperformer. Besides, of late, it has seen some kind of a selling. From long term perspective, it can be a good hold.
Right. The next query is from Arbin. Okay, his name is Arbin, yeah. And he wants a view on Sanofi. His buying price was 750 a piece several years ago when it was Aventis. Yeah. So, I mean, he's been holding the stock since quite some time now, and he wants to know as to he should keep holding it or not. Saurabh, do you have a view on this particular counter?
Not really.
Vaishali, Sanofi on charts?
Charts, it's showing corrective move. Keep a stop loss of 6,000 levels. And it should show a bounce because a decent correction has taken place. You are asking me about Sanofi Consumer, but I am having, this is Sanofi India. 1 minute, I'll just come back.
Talking about Sanofi
India.
No, this is Sanofi India. We pulled up the wrong ticker.
Yeah.
Let me correct that. It's Sanofi India. Let's pull that up because Sanofi India was formerly Aventis, currently trading at 6,190. So he's making quite a considerable gain. The question is, should he book out right now?
No, I don't think so. Wait for it to bounce back. I think seeing overall the long-term chart is intact. I think this can go towards 7,000 levels. So hold on, but keep 6,000 as stop loss.
Okay. Jay is calling us from Bengaluru. Jay, you're asking about Reliance Industries. We've already discussed it on the technicals. What's your question?
My question is, I am a new entry to this business, basically.
Yeah.
So, I would like to know, since the Reliance Industries is down today, is it a good time to invest on the Reliance Industries shares and purchase it?
It's a good question. It's a good question, Jay. But when you bought Reliance, so you say that you're a new investor. When you bought Reliance Industries, you bought it based on the fundamentals, on what the businesses are, or did you buy it to make money in the short term?
Short term.
Short term. So you're looking for a trading strategy on Reliance Industries. We've already discussed it, but I will ask Vaishali to very quickly reiterate. Should you buy at the current price? I know you spoke about the levels to watch, but should you buy, Vaishali?
So, well, there's really nothing, no trigger for a buy. All I can say that it's stabilizing at 1280 levels. So, with a stop loss of 1250, go for it. And for a short-term perspective, look for a target of 1320, 1350.
Right. The next query is from Mamata, who's from Chennai, and she's really, praise doesn't given us.
Very kind of her.
Yeah, very kind of her. Thanks for that, Mamata, first of all. Her query is on IRFC. She's saying that it's showing some upward movement today. Is it a good time to enter now, and what would be the target for the next 6 months? Vaishali, your view on IRFC on the charts?
So overall, as I spoke, that full rail stocks have been doing very well, and IRFC is showing a lot of strength too. So I would say continue holding, and if next 6 months is the horizon, I would say 150 should act as a support line, and look for a target of 180 to 190.
Okay, I need to address this because Deepak Sehgal from Noida has got a question that must be addressed. He's holding LTI Mindtree, and he's been holding for a period of 7 to 8 years. The stock price that he got was 725, and so he's making a considerable gain. It's 31 shares, but he points out that he's continuing to hold shares that are not trading right now for various reasons. Among them is Diwan Housing Finance, and he's asking if we can set off the losses that he's seen in those. Very important, Deepak, that you continue to watch developments in the stocks that you invest in. If there is corporate action, you need to know about it. If a company is going into insolvency, you certainly need to know about it, because what happens eventually, usually, is that there is a delisting that takes place and there is a window for you to get out of the stock before you lose a considerable amount of capital. So pay attention to that. I will take a view specifically on the fundamentals on LTI Mindtree. Saurabh, on the fundamentals, would you hold on to this?
Certainly, I think IT is the space which can be which can be one hold on to, especially after the interest rate cuts by the US Federal Reserve and the ensuing cuts which are likely to come. The idea is that the US economy is expected to do well, and many of the corporates who are sitting on the sidelines waiting for the clarity will start now spending more towards the IT, and the Indian IT will be beneficiary. So in that sense, I think it makes sense to hold LTI.
It is now time to hit the rapid fire segment on this show. It's a 2-minute time frame where we toss as many questions as possible at our experts. Hopefully try and get as many questions answered in that time frame. If we are ready, Saurabh and Vaishali, throwing questions at you now. GMM Fowler is the first question that we're talking about. Prabhu's asking, he's bought at levels of 1,490. Hold or sell? He's in a loss. Vaishali?
Hold.
Okay.
The next question is on Vedanta. Subodh Malhotra is asking this. He's bought 500 shares at 440 a piece. What should be the next course of action, Saurabh?
It should be a hold.
IOCL, bit of a loss, bought at levels of 143. This is Vineet from Uttar Pradesh. He's asking whether to hold. What's the view on the charts, Vaishali?
So IOC continue holding. If all going well, it can go towards 160.
All right. Jatin from Ahmedabad is asking a query on Moltech. He's holding 200 shares bought at 860 a piece. What will be the target for short term and medium term? Vaishali, your view on Moltech?
So Moltech currently it's at 735. So short term is 760. Above that, look for a target of 820.
Okay, stocks like Garware High Tech, Coforge and PG Electroplast in the portfolio, all with gains. Akshat wants to know, should he continue holding? Saurabh, any of these that he should exit according to you?
He can hold all the three.
Okay, 2,000 shares of IDFC Bank is being purchased and bought it at 65 a piece based on fundamentals. How long should he keep holding this, Saurabh?
Next 2 to 3 years.
Okay. Polyplex, this is a question from Jaya. Would you buy this for the long term? Fundamental question. Saurabh, any view?
You can buy.
All right. The next question is from Sanjay Kumar, Hyderabad. PC Jewellers, the stock he's looking at. Is this a right time to enter PC Jewellers, Vaishali? It's seen a good momentum.
I'll just have a look. So PC Jeweller 176. Yes, he can buy. Stop loss of 174. Look for a target of 185, 186.
And with that, we're completely out of time on this edition of Ask Profit. That ends the rapid fire segment and indeed the show. Thank you so much, Vaishali and Saurabh, for joining in, for answering all the questions. Always a pleasure having you on the program. And viewers, we've tried to address as many of your questions as possible. Obviously, can't take all of them, but we will be back tomorrow to take more. So, save the number and try and call us tomorrow. We've got lots more lined up over the course of the day. This is NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy.
Hello and welcome. You're watching KYC. It's a brand new show standing for Know Your Company. It's a brand new show at NDTV Profit. It's a fast-paced world of stock markets, and in this fast-paced world, investors are bombarded with information. But what they often lack is deep, comprehensive understanding of companies that they invest in. KYC, Know Your Company, is a show designed to give regular investors powerful, actionable insights into the fundamentals of single NSE listed companies, and this is one company a day. So today we'll talk about Sky Gold. It's a company which is in the business of designing, manufacturing and marketing of gold jewelry. It's also mainly in the mid-range segment, and it's more in the B2B model is what the company follows. It basically manufactures for some of the very, very reputed B2C companies in the industry. And let's pull some of those up. You have a Malabar Gold, you also have a Senco, a Kalyan, a Carrot Lane, among others that Sky Gold targets and tries to tap into in terms of their market share that they sell to others. Now, in terms of revenue mix, how is that really shaping up? Currently does 91% in the domestic market and just about deals with 9% of exports. So possible to maybe expand that segment or not, maybe something that will be interesting to watch out for. And within the business mix as well, 65% is corporate and 35% is others. They plan to elevate the corporate business share to 100% over the next 3 years. Going to be interesting to see whether that actually plays out. Of course, along with so many things happening. Now, in terms of just breaking up some of the metrics, and that's what we do on every show of KYC, we'll start off first with understanding what the income statement will look like, and thereafter we'll do a balance sheet check. We'll also look at return ratios and try and break those up along with cash flow, and we look at the shareholding pattern, the street cred, and how the stock has basically performed, as well as what kind of dividend the stock has given over the last few years. We'll also look at what the analysts are saying about the company before we dive in and do a stock analysis. a SWOT analysis, I beg your pardon, which is to try and break down what the threats also could be, along with opportunities, strengths and weaknesses. Okay, but Mahima is going to join us. Of course, she tracks the sector as well as the company more closely. Mahima, start off. Tell us what the income statement looks and how is it shaping up to you?
Absolutely, Harsh. So this income statement looks, great. If we see the four main parameters in terms of revenue, the stock has seen a 3-year CAGR of 30%. In FY24, the revenue stood at around 1745 crore. In terms of EBITDA, the EBITDA CAGR has been 81% in the past 3 years. So for FY24, 77 crore was the EBITDA number. Margins are at 4.4% and they've remained in that range for the past few years. In terms of the net profit has seen a CAGR of 100%. So net profit for FY24, the number was 40 crore. So in terms of the income statement for this particular company, it's a thumbs up all over.
Okay, thumbs up all over with regard to the income statement. Let me switch over to the balance sheet. Now, one piece, Mahima, when it comes to jewelry companies, is that your balance sheet keeps expanding in terms of their working capital requirement, because inventory keeps going up.
Right.
So as you grow your top line, your inventory keeps going up.
Right.
And therefore, the important metric to look at here is your net worth. Net worth in FY24 stood at 244 crore at the end of the year. Now, at the end of the year FY24, the inventory level was also quite elevated. It was at 260 odd crore, roughly. In terms of other metrics, and let's look at the cash and bank balance, of course, gross debt, very important. 300 crore of gross debt, which kind of makes sense because the inventory levels have gone up, and that kind of counters the gross debt, but they are sitting on healthy cash balances, 77 crore in comparison to the 240 crore of net worth. So a fairly healthy cash and bank balance that they are sitting on as well, and gives them bandwidth for growth, because some part of this will go to funding inventory.
Correct.
For the purpose of adding more to your top line.
Absolutely.
But that's how the balance sheet is shaping up, fairly neutral, largely because you have a large debt versus your net worth. 300
Correct.
crore of debt versus 244 crore of net worth.
Absolutely.
So we'll give it a neutral where the balance sheet is concerned.
Absolutely. And just to add to that, the management has also said in their con call that with the kind of demand that is already being seen, in terms of the festive season also going on, it makes sense for them to kind of take working capital and make sure that they have enough inventory in store to make sure that the demand is met, which is why you're seeing higher debt levels.
Right.
Moving on to the return ratios, in terms of the return on equity and return of capital employed, the trajectory has been kind of decreasing when it comes to both return on equity as well as return on capital employed. If we check the numbers in 2022, return on equity stood at 28% versus that of 24% in the 2024 year, and return on capital employed in 2022 was around 16% versus that of 14% in 2024. So in terms of the return ratios, we are seeing a slight decline, which is why I think we've maintained a neutral stance when it comes to return on equity as well as return on capital employed. But in terms of cash flow, Harsh, I think because of the high working capital, the cash flows are taking a significant hit here in terms of operations as well.
Well, and it makes sense because you have a company investing capital at around mid-teens in terms of the return on capital employed. And therefore, for that kind of a company, the better thing to do is to reinvest that money straight back into the business. And that's exactly what they seem to be doing, investing in growth. And therefore, your cash from operations not looking extremely healthy, but you look at net cash flows as well, and that seems to be on an improving trajectory. Both of those metrics seem to be on an improving trajectory. So the one possible positive is at least it's on an improving trajectory, but majorly still in the negative, Mahima, where cash flow from operations is concerned.
Yes, but that's something, so this is something that they need to improve on going forward as well. But moving on to shareholding, now, we've seen in the past 1 year, we've seen that promoters have been selling stake in a lot of companies, but this company has seen, a strong promoter base. In fact, their promoter base has increased from 61% to 62.5% in the last quarter itself. And in terms of The overall promoter stake right now, it stands at 62.5% in September 24. In terms of FIIs, they hardly hold around 0.25% share. DIs have no holdings right now in Sky Gold, but public, the retail interest also is very high in this particular counter, where public, however, quarter-wise it has gone down from June to September, but public still holds around 37.2% in Sky Gold so far, as of the numbers present on September 24, Harsh.
Yeah, and I want to try and highlight how the street views the stock, because it's been such a strong performer over the last 6 months. Of course, the 5-year share price return is 19x, so it's been a 19 bagger over the last 5 years, pre-COVID to now. But when you're looking at the last 1 year performance, it's up roughly 4x, which is given a 293% kind of return. But more importantly, it's a large part of that has come in the last 6 months. So the last 6 months is where a bulk of those returns have come through. And you've also seen promoter buying. So both of those kind of, giving a signal to investors that promoter confidence is high despite the kind of stock performance that we've seen. 266% is what it's done in the last 6 months. It's been a 3.5 bagger.
Right.
Extremely strong in terms of share price return. So investors certainly have nothing to complain about despite that negative cash flow.
Yeah, but there's one thing that investors might complain about, and that's the dividend part of things, because FY24, the dividend payout ratio was around 0.9 versus that of 2.1 in FY23. In FY24, it came down to around 3% versus that of 12% earlier. So, and this is of course because I believe that the company is trying to focus on kind of buying more working capital and making the demand which is met, making sure that the demand is met, which is why the cash flow is moving towards the expansion rather than giving it to investors. So I believe that dividend is one part that investors are kind of not happy with, but going forward, so this is something that will be on the watch out for, that once if the cash flows turn positive, how will the dividend payout ratio be like?
Yeah, dividend payout is something which may be important, 100%. But again, for a company making returns of around 15% on its capital, I don't believe investors would mind too much if dividend were to be lower. And that's exactly how even in terms of the stock price returns, that's what it's seeing. In terms of how analysts are viewing it, just about one analyst tracking the stock having a buy rating and therefore not widely covered in that sense. And that's why the neutral rating on this particular count. So while we have a neutral rating on that, because of the lower street coverage on the stock. So that's something that investors should particularly be wary about, because the lower the analyst coverage, the more the risk, of course, of something going wrong. But let's try and sum this up, right? Mahima, let's put it in a nutshell. You have your income statement, which has shown very healthy growth. Your balance sheet, largely neutral, but that is also because of the amount of debt that's gone up. Okay. We spoke about inventory levels going up and therefore debt going up. Cash flow is currently negative, but fast turning positive. But it's that kind of a business. That's the nature of the beast. Return ratios, not the best, but their ROEs are at 14 to 16 odd %, which is again not bad. Your shareholding, currently promoters own roughly 62.5%. They've continued to hike stakes, so that's a positive. Street cred is definitely a positive because the stock has done very, very well. Your dividend payment, virtually zero. High growth businesses, don't reward as well and therefore justified, but negative nonetheless. And your street coverage is largely neutral because you have just one analyst covering it. And therefore, on our ratings counter, it stands at 4.5 on 8. And therefore, that's how it really pans out. But let's move on to SWOT, Mahima, because that is more subjective than objective. We've given the objective view. Let's talk about the subjective.
Absolutely. So in terms of strength, I think Sky Gold has already, taken on board big ticket clients like, you mentioned Senco, Kalyan Jewellers, Carrot Lane, Jar Lucas, etc. And Carrot Lane is one of the recent additions. And in the con call, they've also said that they're trying to get Titan also on board. So if, the biggest jewelry player in India, listed player in India, if they can onboard that, it's a big thumbs up for them. Other thing which really, boosts up demand for this company is the festive and wedding season, which is, going on right now. And we're seeing a lot of gold buying and a lot of studded jewelry buying. And we're also seeing gold prices going up because of that demand. So these are the true strengths of the company. In terms of weakness, while we're seeing good strength in terms of wedding and festive demand, overall demand throughout the year, that's 12 months round the clock, the urban consumption is slowing down. People are now moving towards, in terms of studded jewelry, are moving towards the lab-grown space and the mosaics of the world, which is why I think that this could probably pose a weakness for the company. And the company has still not diversified into lab-grown diamonds. Of course, we did speak to the management and they've said that they're considering and studying the lab-grown diamond space, but they've not entered into the lab-grown diamond space yet, which could pose some weakness and which could kind of weigh down on the company.
Yeah, I mean, you've said it. So what could opportunities be like for the company? They've not yet ventured into lab-grown. Lab-grown is a huge opportunity. Trent has spoken about selling lab-grown and could well be, if Titan is one of those on their list, Trent could very well come on the list as well. So that's one. The other one is that the jewelry market in itself seems to be expanding at a robust rate. The growth rate is around 15 to 16% currently, and the organized segment is growing much faster than that, 18 to 19%. In fact, you had an Aditya Birla start off its own brand in jewelry at this point, which clearly means that they are allocating capital and they believe that there's an opportunity there. Absolutely. And they're trying to tap into that opportunity, and therefore Sky Gold could well be well placed with regard to tapping into some of these opportunities, given that it's one of the only players which actually does this, only structured listed big player which does this, and therefore could well be on the list. In terms of threats, well, gold price fluctuation is definitely a threat. Gold prices have been on an elevated level, and therefore, because Sky Gold is simply a contract manufacturer, the demand will start to fluctuate as the gold price starts to increase, and that could well be a risk, right, for someone who's just a contract manufacturer and who makes a margin on the gold that it actually designs and sells to its clients and customers. The other piece is the lab-grown diamonds are actually hindering the demand for natural diamonds. Natural diamonds are higher ticket, lab-grown diamonds are lower ticket. Sky Gold doesn't do natural diamond, doesn't do lab-grown diamonds. It only does natural, and therefore you'll see some amount of demand coming off with regard to natural diamonds, which could well be a huge threat. Whether they convert that or not is something that we'll have to wait and watch out for. But for the first time on this show, we've tried to also dissect the latest news that's come out with regard to the company, which will hopefully give viewers a better perspective. Mahima, I'll hand it over to you for that.
Absolutely. So recently the company has raised a QIP of roughly 270 odd crores, which they'll be using for their working capital needs first of all, and of course expanding into key regions as well as the new clients that they've onboarded and the new acquisitions that they've made. They'll be using this money towards expanding demand for coming in from these clients and acquisitions, and they also aim to increase their addressable market overall from 35% to 70%, which is almost doubling their addressable markets, which is where they'll be using this money as well. So first off, they've raised a QIP of 270 crores, which is a thumbs up for them. And like I mentioned at the start, they've recently onboarded 2 new clients, that is Carrot Lane and the recently listed PN Gadgil as well. So adding both of these to their portfolio is also going to augur growth for the company going forward, because they'll be catering to demands of these 2 new big players in the jewelry space. But Harsh, talking about how the company is growing, they've made two very interesting acquisitions. I think you know well, and you can talk about that.
Yeah, so two acquisitions. One is Star Mangal Sutra Private Limited, which obviously, as the name suggests, is into that segment where the Mangal Sutras are concerned, and therefore the demand for that likely to rise, at least in the near term, given the number of weddings that are in the pipeline. You also have Sparkling Chains Private Limited, which it has acquired. So both of those acquisitions to add healthily to the diversification strategy for Sky Gold. So that's one. Second is production. Volumes have continued to rise. Your monthly volumes have seen significant increase. In fact, from 200 kgs last year, it's seen a significant increase, and capacity utilization still is quite healthy at 46%. In fact, subsidiaries are operating at just about 30 to 33%. The company continues to push new designs, 2,000 new designs coming through monthly to cater to all of their clients, and the size in terms of the amount, in terms of the revenue contribution which Sky Gold does to its clients is still very small. So the kind of opportunity available for growth even among existing clients is very, very large. You have new initiatives. They've launched a trial app to facilitate real-time orders from customers as well. So there are certain new certain new initiatives that they've taken as well to try and grow the business better. Right. Mahima, with regard to company guidance.
Absolutely. I'll quickly go through the guidance. They're targeting 6,300 crore revenue by FY27 and 5,000 by FY26. They expect to turn cash positive by FY26 is what the management has said. And they anticipate 25 to 30% growth in the retail space. And overall, the two new acquisitions will contribute around 500 crores by the end of Q4 FY25 is what the management has said, Harsh.
Well, yeah, so those are sizable. But with that, Mahima, let me thank you for joining us and for breaking this down for us. But without further ado, let's now shift focus to the management itself. We managed to catch up with the whole-time director, Darshan Chauhan, earlier. And here's what he had to say on the company's growth prospects going forward. Listen in.
Going to the festive season, there's a huge marriage season in January, December, January, February and March. So it's highest in India, 25% more, which is highest of the years. So 4.8 million weddings are going to be in India, which is highest of the years, and which is going to create a 6 trillion of revenue, in which jewelry will contribute to 25%. So there is a huge demand for the marriage this year. There are records broken in this year for the marriage season, and we are also receiving good orders from all our corporate clients, and giving there is a good feedback that there is a huge footfall for marriage season. So marriage season is going to continue till February, March, and then again Akshay Tritiya, the hugest festival of jewelry, is coming ahead in April month. So we will be preparing in second quarter for Akshay Tritiya. Now we are busy with marriage season orders. So there is a good demand in the market for marriage.
Right. Mr. Chauhan, you're also, planning and going big on international expansion. You're targeting international markets such as Middle East, UAE, Singapore and Malaysia for expansion. I also want to understand, because, you've also raised funds. So I believe that you'll be using these funds to, kind of expand your exports as well. So I want to understand how exports will be 2 years down the line. What will the mix be like, export versus domestic?
So we are recently in 2 quarters going in the way of 9 to 10% of the revenue from the exports, and we are targeting it to take it to 12 to 15% in next 2 years. So majorly we are concentrating India because India is a huge market. So we'll be rely on India for 80-85%. We'll not take exports ahead of 15-20% of the revenue. Going to the expansion, we are expanding in Middle East, especially in UAE, like Dubai, Qatar. There is our existing client like Malabar Gold, Kalyan Jewellers, Joy Lucas, all opening store in here also in all the UAE countries, in Singapore, Malaysia, and we are supplying to the corporates available in the UAE, which are major in Singapore, Malaysia and UAE. They are also expanding their store drastically. They have expansion more. So we are concentrating in our products is made for the Asian countries. We are not, our product does not match to Europe or European countries or US countries. So we concentrate in the Middle East on the Asian countries only. And our existing clients also expanding, and their their UAE corporates also expanding. So we will be keeping a blended of 85 to 85% of India and 15% to exports, and take this 10% to 15% in 2 years from exports.
Okay, Mr. Chauhan, so considering that, your exports will rise going forward, do you expect a change in your margin? I know that you've given a guidance of roughly 7 to 8% in terms of your gross margins, and around 5 to 5% for your EBITDA margins. But do you think that your EBITDA margins will cross that 5.5% mark because your exports will go up significantly?
So we are concentrating on many verticals. We have launched many verticals. After the fundraise, we have infused fund in 18 karat rose gold jewelry, white gold jewelry we have launched. We are concentrating on studded diamond jewelry, natural diamond. We are looking to introduce lab grown also in future. Just having a look what the market is responding to the lab grown diamond. So we are expanding in many verticals. That will bring us blended margins. So we are expecting to improve the margins from 5% EBITDA to 5.56% in coming 3-4 quarters.
Yeah, so 2 years down the line then?
So I will not give you the perfect number, but we are expecting to improve 0.5% or 1% from there, from the existing margins. Yeah.
Okay, and that's over and above 6%, right? Okay. Mr. Chauhan, since you mentioned about lab-grown diamonds, I also want to understand that lab-grown diamonds and moissanite are the two things that are really picking up. I want to understand what are the kind of demand trends that you have observed, because you've actively been studying this space as well.
So both, you have a good question that moissanite is also working in India. Women are liking moissanite jewelry because it's a replacement of diamond. It is made in laboratory, but moissanite has its place. He's working on his place. But lab grown is a new talk in the market, buzz in the market in US and Europe. It's a very good response of lab grown diamond. But in India, it's a mixed view. Some of the clients are telling that natural diamonds people want natural diamond because it's a luxury to wear. They want the resale value. Lab grown doesn't have the. But of course, we cannot deny that lab grown is not picking up. Lab grown is started picking up, and we are also closely looking into it and having a wait and watch position. We are in a wait and watch position. As soon as we get the data that lab grown is picking perfectly and a customer are accepting it, we are also planning to enter into it, and we are into making a samples for them for lab grown diamond. And I think Indian government also inspiring for lab grown diamond because it is made in India, so we don't have to import much natural diamonds. So we are also in the path. If natural diamond is growing very good, we will be launching in 1 or 2 quarters.
Right, and since Trent is entering into the lab-grown diamond space, we know Tanishq and Titan is not, but Tata is entering into the lab-grown diamond space via Trent, and you've recently onboarded CaratLane as well. Are there any talks with Trent going on to enter the lab-grown diamond space from your end?
Yeah, so no talks with Trent because we are not into lab-grown diamond. We have not made a single sample, also we are just watching the market, and we have started seeing getting the data of the market, and we are planning to make some samples in 1 or 2 quarters. Whenever the product is ready, we can approach them and show the product. Before that, we have not approached them, but we are into a mindset that we will go into lab-grown diamond in 1 or 2 quarters.
Okay, Mr. Chauhan, in terms of gold price fluctuations, we've seen a lot of volatility when it comes to the gold prices. What is the kind of hedging strategy that you have in place?
Yeah, so we have a hedging team inside. So we hedge every sale and purchase of our bullion or our jewelry is hedged in the MCX. Totally our inventory and sale and purchase are hedged. So we are not open to the market. So because of the huge inventory we hold, so we cannot keep it open. Going back to the margins, as the gold rates, gold is appreciating assets, it goes up every time. So as the gold goes up, our marking charges also goes up because it is in the percentage, so we gain much. But other side we have other expenses or employee costs growing up by 10 to 12% yearly, so it get absorbed. So it's the same. Yeah.
Okay, Mr. Chauhan, one last question before I let you go. You've launched your new app and you're running trials with respect to that. What's the kind of response that you've received and how is the progress there?
Yeah, already we have made the app and we have launched it and we have started getting the order from the purchase managers, store managers and all. It is in an initial stage. We are going to add the AI technology also in that. So we are into talks with them. So in 1 or 2 quarters, it will be full-fledgedly available for all the clients and we'll get a major order online. We are targeting that whichever our revenue is coming, 30-40% orders should come on online only. So by March quarter, we'll be on track. Yeah.
Well, such great insights, when you speak to management to kind of round up this conversation. 4.5 on 8 where Sky Gold is concerned. Just 2-3 things I'd like to highlight here. One, the book value of the company is 254 rupees a share, and therefore the stock trades at 18 times in terms of price to book. It works at 83 times price to earnings. Good return ratios, even though they're falling, but it's something that concerns the ratings because your return ratio is falling, not really helping. But with that, I hope this was an extremely productive half hour. Hope to see you on the next one. Stay tuned to NDTV Profit. More action on the other side.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant food above a 600 level on Friday.
Wipro can be first to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands.
Hello and welcome to NDTV Profit. You're watching Hot Money. I'm Hiral Dadia and joining me is my colleague Varsha Chandani. Let's quickly take a look at how markets are panning at this hour. Pull up Nifty 50 on the screens and see what's happening on that front. Clearly, we're above the 24,600 mark, inching towards 24,700 with gains of around 0.3% coming in there. If you see in terms of Bank Nifty as well, interesting moves on that front, pretty much on the borderline, trying to get back into the green as we speak. Overall, if you go to see in terms of stock specific action, and if you have to look at the advance decline ratio as well in terms of the Nifty, let's pull up what that looks like. NSE stats tell you the advances are more, so 1292 advances versus declines of almost 830 odd declines coming in there. Which are the stocks that are leading these gains, in today's session? First, let's look at the sectors. If we can get the sectoral heat map to understand the trend. Okay, we have the Nifty contributors and the heat map here. Nifty, metal, FMCG, auto taking the gains in today's session,
Pharma is also up in trade. What's losing? You have Nifty PSU Bank Index, which is down 0.3%. Media is trading under pressure. BankX pretty much on the borderline. Nifty IT and Energy also on the borderline. In terms of stock-specific action, Britannia, Nestle, Asian Paints, all of these counters are up and about in trade. In fact, there is a consumer summit that's happening right now as well in terms of Mumbai. So a lot of commentary that's coming out of there as well. And that's probably what is enthusing FMCG counters in today's session. Ultratech Cement is up in trade. Bajaj Finance, after the commentary in terms of their investor day and the brokerage reports that have come in, that stock is up in trade. On the losing end, you have names like Adani Ports, HCL Tech, Tech Mahindra, TCS. These are the ones which are losing out in today's session. Let's quickly look at the broader markets as well. Varsha, in terms of broader markets, what is the trend that you're picking up? Are they mirroring what's happening in the larger space?
Yes, actually, broader markets are performing pretty better than, Nifty, your benchmark index. Let's see what is this, who are the contributors to this rally. If you see, RVNL is actually up 4%. Actually, all the railway stocks are up in trade today. We'll see in the small cap index also. And Syngene International is actually up. Now, we have seen the US Biosecure Act. Because of the US Biosecure Act, out of the key defense theme, many of the CDMO companies were down on Monday. Now Syngene is up. Also, Biocon recently sold their stake in Syngene as well. And then if I were to talk about, small cap index, so small cap 250 is also up. Now the upwards rally is actually contributed by your PNC Infra, wherein we have a news, they have commissioned one of their project. And then there you go. Also, you have Jupiter Wagons and all the railway companies which are in focus. And well, Railtail is up because they had an order win. Though the order was very small, kind of 12 crore. Yesterday also Railtail had a order win as well. But interesting thing here is the mid cap and small cap. If I were to speak about, they closed in green. For the last 13 sessions.
That's interesting. Last 13 session of gains in terms of where the broader markets are concerned, and few of the other names which are buzzing in trade today. You have Sun, PNC Infra already mentioned, Swan Energy is another one. Shriram is another one that is seeing some smart moves. Sunflag Iron and Steel, that's another counter which is seeing some smart moves in today's session. ITI has been an interesting one. Last couple of trading sessions, ITI saw some smart moves today. You are seeing some bit of profit booking that's coming in with regards to where ITI goes. Dani Services is taking a beating today. La Opala is down in trade. Siet is also under pressure. But let's quickly shift focus to the key themes that we are going to talk about over the next 50 minutes that we have so far. Firstly, cement prices could see a hike in the second half of the year. We just have 3 months remaining. And is that what is enthusing cement stocks in today's session? On number 2, you have big order wins that have continued on the large street. So a lot of companies that will be gaining out of it. On number 3, you have successful project commissioning and capacity additions that have come our way. So stocks that will benefit out of this. And another sector, will steel import duties help domestic price hikes? Because that's a space where steel companies have been struggling. Supply shortage from Brazil has fueled coffee prices to increase. How does this impact coffee companies in India? And as always, you have brokerages of the day. A couple of them today that are in their making. And lastly, IPO fever continues on the large street. 5 companies set to go public this week. So these are the 7 themes that we are focusing on. But on number 1, we have cement prices, that could see a hike that could be coming in. Overall, if you see, my colleague Mihika joins in with more in terms of what's on the anvil with regards to cement prices. Mika, cement companies, all of them trading in the positive as we speak. A couple of brokerage reports that have come in specifically. Now you have a CLSA, which is indicating a couple of points from here on. What are you picking up?
Yeah. So CLSA's latest news actually highlights the cement prices in early December, which as per the brokerage has inched up to rupees 10 to 30 rupees per kg. Most of these price hikes in terms of quantum has been coming in from the east and central regions, while the other regions have seen a marginal uptick. Now pan-India cement prices are now in Q3 so far up 3.5% on a quarter-on-quarter basis, but it is to be noted that it's still down 5% on an annual basis. But as per CLSA's consensus estimates, they do expect prices to increase 4% in the second half of FY FY25, which will aid cement companies in their profitability, which has been hit for the past several quarters because of weak demand and pricing. But the sustainability of the price hikes until and through March 2025 is a key monitorable. They also remain positive on demand recovery. October demand was muted. November did see some green shoots towards the end as the festive season got over, and they are positive for demand rebound in H2 of FY25 as well as FY26. Lastly, in terms of their top pick or preferred pick, they do remain selective on this sector depending on the visibility in terms of growth and cost initiatives, and their preferred pick is Ultratech Cement.
Well, thank you, Mihika, for that. For the outlook for the same, let's call Astha Jain, who's the Senior Research Analyst of Hem Securities. Welcome, Astha.
Hi. Good afternoon to both of you.
Good afternoon. So, Astha, now, on this, the CLSA note wherein the cement prices are up at 10 to 30 per bag, how are you taking this news and what are your top bets?
Okay. So, see, the thing is that we all know that the cement prices, it's been long since we have seen hike in the cement prices. So, first of all, it is long awaited. Secondly, if I look up to the government infra spend, so I think H2 is always more of a positive half year for the government spending. So in that way also now I think there is a demand which can be seen, and that is what we are seeing, that there is some price hike has also taken place. Now in case of cement, what we know that when one company came, like we know that there are various new entrants, and due to which we have seen across the board there was a fall in the stock prices because competition has increased when the new players started coming in. But now with this price hike, I think it is always a positive because still we have a strong competition in the cement space, but now the price hike will always help the companies in improving their EBITDA per ton, first of all, and then definitely in the bottom line, the impact can be seen. So we are positive on this news, and we are recommending Ultratech Cement because this company is a major cement player, and we can see that there is a strong momentum going on in the stock prices as well. If I talk about the technical school of thought, so both from the fundamental as well as technical purpose, I think if anyone want to look after any stock, then Ultratech Cement is looking good to us, followed by Ramco Cement. So these two counters are looking good to us, and we are recommending buy on them.
Right, a buy coming in terms of Ramco Cement as well as Ultratech Cement from the cement space. But moving on, the second theme that we're looking at is order wins. I mean, that has been the flavor last couple of trading sessions. You're seeing multiple of them coming in there. Firstly, let's pull up a HG Infra, a 763 crore order coming in terms of road transport and highways, which will be executed in 2 years. They're targeting an order inflow of almost 11,000 to 12,000 odd crores. You have BEML as well, which is up almost 3% in trade. And again, this is on the back of the order worth 833 crores that was received. They have an order book of almost 11,453 crores as on September. You have NTPC Green as well, and they have an order with regards to developing 500 megawatt solar power project, and this is set at around 3.52 rupees per kilowatt per hour. It also includes a 250 megawatt or per 1000 megawatt hour energy storage system. So 3 stocks on the back of an order win: HG Infra, NTPC Green and BEML. In fact, let me just head across to our guest to understand as to what do these 3 counters mean. What is your view on these 3 stocks?
First of all, talking about HG Infra, we are positive on this counter, recommending a hold as well as a buy on dip strategy with a price target of around 1640 on the upper side. Similarly, if I talk about the BML, we are very much positive on this counter, and we have recommended it to our clients also a week before. So now what we are looking is that although in case of BML, their Q2 was soft, but order intake was always a primary focus for such companies. And we have seen that the now strong order intake is going on. So that is definitely going to help the companies in improving their financial performance because Q2 was not very strong. So in light of that, we are very much positive on the BEML also, and we are recommending it for the price target of around 4,800 to 4,900 at the initial level. Talking about NTPC Green, the moment the IPO came, I think this stock has always garnered strong interest, not from the retail public, but also from the institutional investors. And that is what we are seeing, that from the IPO price, it has shown one-sided momentum. So we are positive on this counter as well. and positive on NTPC Green, but our price target, which we are limiting to at present point of time, is 165 because it has seen a quite strong jump from its IPO price.
Right, so bullish on NTPC Green. Now moving on, KP Group has secured 300 megawatt solar project in Gujarat from Coal India. Here's what the CMD shared about the company's plan to complete the project in 1 year.
KPI win the order of CIL from the central government order for the Khavda solar project, and it order is 405 DC and the 300 AC project, which is the highest and biggest order for the KPI till date in the EPC, or you can say the CPP segment, which create the revenue for the KPI for the next year is 1311 crore rupees, which will be very lucrative for the us, and very enthusiastic team is very enthusiastic to do this project within a timeline of 12 months, which they have already mentioned in that. We will try to do it early because we are already doing this in Khavda 240 megawatt IPP, which we are going to charge by March. This is our expectation. So it is very easy for us, and team is already deputed there from last 6 months. So it's very good for us, and we are looking forward more orders in Khavda also.
Right, so more orders in Khavda, Gujarat is what the company is aiming for, trading pretty much flat as we speak. But moving on, in terms of capacity additions and commissioning, let's look at PNC Infra as well as Blue Jet Healthcare. Both of these counters have been in focus. If we can just have what the stocks are doing. PNC Infra up almost 9 to 10%. Blue Jet Healthcare is trading pretty much flat. Varsha, what are you picking up on both these counters?
So Hiral, we heard a lot of news about companies doing capex or companies actually expanding capacities. But here, if you see these two companies, PNC Infratech and Blue Jet Healthcare, have actually commissioned the project. So starting with PNC Infratech, their subsidiary has completed project to expand highway to 4 lanes in Uttar Pradesh, and the provisional certificate has been issued on December 7, and the contract was worth at 738 crore, and their unexecuted order book as of September 30 stands at around 19,900 crores. While if you see in FY25, they have actually decreased their guidance. So they are expecting a revenue decline by 15 to 20% in FY25, but revenue increase of 30% in FY26. I'm assuming this is because of all the fiasco that has happened in this company, PNC Infratech, while EBITDA margin guidance has been maintained at 12 to 12.5% for 25 and 13% for 26. Now, if I were to talk about Blue Jet, so again, this company is into contrast media. So the dye, so whenever you do an MRI, there's one dye which has been injected in your veins, so that the images are very clear to you. So Blue Jet actually commissioned their production block for advanced contrast media. Their facility is located in Ambernath, Maharashtra, and their existing capacity, if you see, stands at 1,140 kiloliters, and they are yet to increase their capacity in next 3 months. So Astha, coming to you now, especially I'm interested into this Blue Jet Healthcare. You see that the contrast media industry itself is growing at double digit. Even DV's in one of their con calls is actually bullish when it comes to contrast media. Are you tracking this space or Blue Jet for this contrast media?
Yes, definitely. But what we have seen that there was a dip in the revenue, especially in the contrast media, I think in Q2 of FY25 numbers. But we are very much positive on especially PI, API segment. In fact, Blue Jet is building its around 12 to 15 molecules, I suppose. So that will be now giving the strong direction to its growth momentum. So along with the commissioning of this facility, I think the kind of product pipeline they are having with the 12 to 15 molecule, definitely, I think that is mainly in the cardiovascular space, if I'm not wrong. So I think that is a positive momentum for this company as well. So we are positive on this counter, but results were not very strong in Q2. Hence, we are limiting our price target to around 905 at the current juncture.
Right. And also coming to you for this PNC Infratech. So the whole fiasco that happened, where Ministry of Road Transport and Highway disqualified this company for order bid participation for next 1 year. How are you seeing this stock now? Because in FY25 company has revised their guidance. They are seeing decline in revenue of 15 to 20%.
Yes, and that is what we have seen in the stock prices also, because we have seen there was a sharp correction few days or a few weeks back. But now, what is major focus point of this company is its order book. Still, the order book is at around 19,910 crore. So this is looking very strong to us. And on the back of that, we are positive on this counter also. Our price target for this counter is 370 to 375 at the initial levels.
Right, so that's with regards to where PNC Infra goes, as well as if you talk about, the other company in terms of Blue Jet Healthcare. Let's just quickly pull up a 12-month chart. If you see PNC Infra pretty much flattish, but Blue Jet Health, if we can just have a 12-month chart in terms of Blue Jet, there you go, 51 to 52% is the kind of uptick that has happened on this stock as well. But moving on, the next theme that we're looking at is steel companies. An interesting move in terms of steel companies that we have been seeing, and this is where the steel ministry probably is proposing the finance ministry with regards to a potential safeguard duty. Tata Steel, SAIL, both these counters are up in trade. JSPL is another one, JSW Steel is another one that we have been watching out for as well in this space. Mika, let me come across to you. Couple of factors. You have imports which are increasing, exports which are dwindling, prices in terms of the domestic market is becoming a concern as well. What is it that you're picking up so far?
Yeah, so there are a lot of factors that are, at play in terms of pricing and industry. I'll first start off with the imports and what media reports have been stating. The Steel Ministry has proposed the Finance Ministry for a safeguard duty of sorts for the increasing steel imports at a 25% duty, and this move aims to restrict the cheap steel imports that have been impacting the industry in terms of prices, demand, etc. Now, Nuvama has come up with a report in terms of the impact of the potential duties, and they do expect safeguard duties to come, but not as high as 25%. And these impositions will restrict imports over the medium term, and the potential duties coupled up with a good seasonally good quarter coming ahead could allow Indian steel producers to actually take a price hike, is what Nuvama is stating. They expect 2,000 to 2,500 rupee per ton price hike for Indian steel producers within a month. In terms of stock specific, they said that the earnings improvement have already been factored in the stock prices, and they have stated to book profits in JSW Steel, Steel Authority of India, as well as Tata Steel, and their preferred pick is Jindal Steel and Power. In terms of the overview view on the Indian steel industry, well, Nuvama does state that the domestic HRC, which are hot rolled coiled prices, are trading at a 2% discount to landed cost of imports, but they do expect India to have excess supply over the next 2 years, as major companies have commissioned capacity to the tune of 17 million tons per annum. So they do state that India needs to push the export side of things in order to gain additional volumes, and this can only be possible if China dials down the export. And as per Nuvama, the falling exports are a bigger concern than the elevated imports.
Right, so that's with regards to where steel companies go. Asta, how are you looking at this aspect with regards to where safeguard duty goes that is being recommended so far in terms of imports, but exports have been a concern as well on the back of the China dumping that has been happening? And thirdly, if you see in terms of prices, they have been on a downtick, and that's what is keeping the margins under pressure. What would you advise investors to do with steel companies?
So basically, but I think in the iron ore, the prices have not been so soft as we have seen. So I think that is the one major point here. Secondly, what we are saying that yes, dumping from China, and there is a reason behind it, because the housing sector in the China is still showing the sign of stress, and that is why now the Chinese makers are now dumping their steel. So that is one major point, and I think all the steel companies are facing that pricing issue. But in the iron ore segment, I think the issue is not that much, and that is why we are positive on the companies which are basically into the iron ore, and in that space, we are very much positive on NMDC. So my idea here is to buy NMDC at the current level also. So one can have a buy call on the NMDC with the price target of around 265 or 270, 10% higher. One can keep the targets at for NMDC.
So Asta, so Nuvama is actually recommending to book profits in JSW and SAIL and Tata Steel. Now, with respect to this, what are your top picks?
So in the steel sector, we are not very much positive in the shorter term. But yes, in the longer term, Tata Steel is looking good to us because there are various reasons behind it. So in the longer term perspective, if I talk about any company, then only Tata Steel is the one juncture where we are positive on. And recommending a hold, not even buy, because we are expecting some more fall to come. So maybe buying on dip strategy can be applied at 145 level. But at present, if someone has Tata Steel in their portfolio, then they continue it with a price target of 175 to 180.
Okay. Apart from these, another space that has been buzzing today is the FMCG pack. You have names like Britannia, Nestle, all of them up and about in trade. If you talk about Asian Paints as well. Now, this sector has been expensive. There have been concerns with regards to where input price is concerned. Urban demand, major concern again, rural demand has been picking up, but at a slower pace. Astha, how are you looking at FMCG and any top picks over here?
ITC, although not pure FMCG player, but still we are positive only on that counter. On the back of, not very good numbers, but average numbers. So ITC looking good to us because this exit division is also working strongly, and in fact, their hotel division is yielding good results. So in the FMCG space, although it is not pure FMCG player, but still, if I would like to go with any counter related to that, then it is ITC. So positive on ITC at present moment.
Okay. So that's with regards to FMCG players go. And Astha, across the board, as of now, if an investor is looking at idle cash, where would you advise him or her to deploy their money with stock?
So we are positive on other sectors. Like if I talk about electronics or power sector, then Sulzer Electronic is one mid-cap counter which is really appealing to us. So first of all, Sulzer Electronics is the space where we are advising our clients to deploy their funds in. And secondly, FL India, although these spaces are entirely different, not related to the counters or the industries or sectors which we are discussing, but Sulzer India, Electronics and FL India. FL India is also looking very positive to us. As we all know, they are into the mobile advertising, and basically their main focus point is 90% of the revenue coming from, per converted user, cash per converted users. So here, I think they have shown strong performance. They have a strong number of clients. FL India can be a good story to bet in the long term. Price target can be set at around 2000 odd level. So Sulzer Electronics and FL India, these two counters are looking good to us.
Right. Astha, anything on pharma, because now US Biosecure Act was is out of key defense bill, but still people are betting from China plus one policy as well, and also this obesity drug. So any preferred picks on pharma?
We would still like to go with Divi's Lab. So in the pharma space, Divi's Lab is still looking good to us. We know that due to the ongoing news about the US Biosecurity Act, we have seen these stocks falling and behaving negatively. But I think in the longer term, these are strong setups, and these news are temporary news. So I think, and they can have a temporary effect on the stock prices. So I think good opportunity to buying at the lower levels. So Divi's Lab is looking good to us. One can take a buy in the counter at around 58, 50 odd levels with a price target of 6,200 at the initial.
Right. So Divi's Laboratories becomes a buy for Astha. Thank you, Astha, so much for joining us on the show and sharing your views. But with that, we'll quickly slip into a short break. On the other side, lots more other themes that we will be discussing with our guest. Please stay tuned.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
whole day passes like a blur. The news just whizzes past. And you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. You're watching Hot Money. Now, coffee stocks have been in focus in today's session. Let's quickly pull up some of the names that we have. Coffee Day Enterprises in focus, ECL Products, Tata Consumer, and a Vintage Coffee. My colleague Mahima joins us to tell us more because supply shortage from Brazil is what is actually fueling prices in India. Let's understand what's the impact. Mahima, over to you.
Coffee prices have hit a record high after trader cuts Brazil crop outlook. Now, both Brazil and Vietnam are seeing pressure in terms of production of coffee. Arabica futures are up 73% in the past 1 year, and Arabica futures are up 31% in the past 1 month itself. Robusta futures are also up 83% year on year. Now, this is because coffee prices are on the rise because supply of shortage from Brazil is taking place, and companies that are likely to see impact include Tata Consumer, Nestle, Vintage Coffee, and CCL Products. Now, in terms of Tata Consumer, this could prove a positive for the company because Tata Consumer recently merged with Tata Coffee, and Tata Coffee outsources its coffee plantations. So basically, these coffee plantations will yield better realizations for the company because even in India, the coffee prices move in tandem with the Arabica and Robusta futures. So positive for Tata Consumer, but Nestle will have to face the brunt in terms of margins because Nestle sells coffee to retailers, and because of this, because of the raw material prices going up, it will have a pressure on their margins. Lastly, exporters like Vintage Coffee and CCL Products will also see the brunt of high rising coffee prices because they use coffee as their raw material, which is why their demand might get affected and margins might also see an impact. So this is the overall view of how coffee prices will affect the Indian consumer space.
Right, so this is with regards to where, how the companies will get impacted as well. So the interesting view coming in on this front. But overall, if you see in terms of coffee prices, CCL Products, whenever we've spoken to the management as well, they've clearly indicated that they don't see a major impact in terms of pricing, taking into consideration the way their business has been integrated. The stock today is down almost 3%. Let's pull up a long-term chart of all of these three counters from a one-year perspective and see how the performance has been along with Nestle. CCL Products, if you go to see last 12 months, 22 to 23% is the kind of uptick that has come in on that counter. Apart from this, Vintage Coffee, let's see how that stock has performed as well. Tata Consumers, again, 12 months, 2% downtick. In fact, it's at the lowest levels that we've seen in the last 1 year. Vintage Coffee as well, last 12 months, the stock has just given you returns of almost 2.6 times. So an interesting move in terms of Vintage Coffee. And let's pull up a Nestle also on the screens and see what's happening to a Nestle overall in the last 12 months. Again, a 10 to 11% is the kind of downtick that we've seen in terms of where Nestle goes. So these are a few of the coffee makers. In fact, we should be talking to them as well to understand how the impact will play out going ahead. So that's with regards to where overall the coffee space goes. But also you have a Goldman Sachs that has actually maintained a sell rating on Avenue Supermarts. Now that's going to be another stock that we will be focusing on, but this theme is entirely about how brokerages of the day pan out. Let's look at Avenue Supermarts. Let's pull up that one on the screens. You have Sun Pharma, Cipla also, that's in focus on the HSBC note that has come in on Indian Pharma. And you have a Bajaj Finance that is in focus as well. You have, on the back of their investor day, 2 brokerage notes that have come in on that stock. And you have JM Financial top picks that we will be getting to you as well. But firstly, Avenue Supermarts, you have a Goldman Sachs. Mahima is again with us to tell us more. Mahima, what is Goldman Sachs telling you about Avenue Supermarts, taking into consideration that they are far behind versus the quick commerce players now?
Right, Hiral. So basically they've maintained sell with a target price of 3425, which was earlier 4000. Now they're saying that DMart is increasing price discounts to maintain the competitive advantage. We've seen that quick commerce players like Zepto and Blinkit are going big when it comes to discounts. Zepto's now Super Saver is almost matching the price of DMart prices. So to maintain that, DMart's has taken almost a 25% discount to its MRP in December 24. In terms of the DMart's addressable market is only 1/5 of the total $500 billion market is what Goldman Sachs is saying, and this is because they don't cater to rural, meat or intoxicants category as per Goldman Sachs. Now DMart has grown headroom beyond top 10 cities, but this has been slower, and this will be slower going forward because they don't lease or rent their stores, they basically own the stores. So this might hinder their overall demand and expansion as well. Lastly, they have said that they cut earnings multiple by 4%, 6% for FY26 and 27, and also 6% by FY27, and they lower the multiple to 60 times going forward. That is the PE multiple. So this is the overall view of what Goldman Sachs is saying about Avenue Supermarts.
Right, so that's Avenue Supermarts. Asta, welcome back. In fact, in terms of where all the coffee players go, we were talking about CCL products, Vintage Coffee, Nestle. How are you looking at them? What's your view?
So yes, we are positive on this space, but as we know that the results of Nestle were not that very strong. So we really need to look how the urban demand pans out to be, as well as rural demand pans out to be in the Q3 results. So on the back of that concerns, we are positive only on one counter as of now, and that is Tata Consumer Products. For the other FMCG players, we really need to see their Q3 performance, because I think the outlook which has been shared by these FMCG companies still not coming out to be on the positive side. So right now only positive on Tata Consumer, and recommending a hold on it, as well as buy on dip strategy can also be applied at the lower levels at around 910 with a price target of 990 to 1000 at the higher side.
And Astha, on Avenue Supermart, so Goldman Sachs has slashed Avenue Supermart's earning estimates for 3 years, that is 25, 26, 27, due to competitive pressures and headwinds. Now, what are your views?
Yes, definitely, because now what we are seeing in the quick commerce space, where Swiggy and Zomato are already there, and now what we are listening latest that Amazon is also trying to enter into the space, and they have made certain announcements also. So on the back of that, I think now a competitive pressure has really started showing their impact on the financial performance of Avenue Supermart, and that is why we are not able to see the good stock price momentum also. So right now, our idea is those who have this counter can continue holding it, but here the horizon should be very long term, because in the short term, we can see some more pressure coming on the financial performance. However, for the new buying, we are not recommending this counter.
Pharma.
Right. Thank you, Asta, for that. Now, pharma actually has been focused since quite a few days. Now, HSBC has came out with a report on Indian pharmaceuticals, wherein they are bullish on Cipla, Sun Pharma, Lupin, Torrent and Aurobindo. So what are they saying is in FY25, so FY25 will be good year for the companies that they cover, which are listed just now. Now, this is driven by peak sales of Revlimid. Now, Revlimid is a cancer product which all pharma companies were actually betting on, and new launches in US like GLP-1 drugs. Now, GLP is an obesity drug which all the pharma companies are actually bullish on, and they are expanding their capacities, or they are entering into this GL1 product. Now, so HSBC is saying that this will, so the peak sales will come from your new launches in the US, that is GLP-1, to offset the decline in Revlimid sales. So Revlimid patent will expire in FY27. Now everyone is actually bearish. Now what after Revlimid? So GLP-1 is the one product that they are bullish on, and the focus will be on executing key product launches in the US, such as Abrysing for Cipla, then expanding into complex generics like inhalers and peptide injectables, which are actually critical for these companies to support their US growth after the your Revlimid cliff. Also, Indian pharma companies, according to HSBC, will likely start launching this GLP-1 products and in sooner, and the Indian pharma market is expected to grow at high single digit, backed by price increases and new launches. Now, also, improving biotech funding and diversification strategy should help sustain interest, though revenue will follow later according to HSBC. But however, HSBC has noted down some risk as well, like potential delays due to FDA inspections that we see in our day-to-day life, that many of the pharma companies go through this pain of FDA inspection. Also, the other is that HSBC highlighted was intellectual property challenge and rising raw material costs due to geopolitical issues. They prefer Cipla, Sun Pharma, Torrent Pharma and Lupin for their solid growth potential, with Cipla and Sun Pharma well positioned despite the eventual loss of the Revlimid, that is cancer sales, and though they see the loss of Revlimid sales post Jan 2026 is priced in for Sun and Cipla. Well, Astha, coming to you again on pharma stocks. Now, HSBC is bullish on Cipla, Sun Pharma, Lupin, Torrent and Aurobindo. Well, I heard you saying that you are bullish on Divi's Lab. Now, on these stocks, what are your picks?
So yes, even Cipla is looking good to us. Now, if I talk about the Cipla, their product line is diversified. We have their respiratory products like on the one hand, and on the other hand, there are other chronic therapy, etc. also, which are working for them. So I think that is the major focus for the Cipla. And in fact, the Cipla is also resolving certain regulatory issues, and they are now expanding their product pipeline also. So I think on the back of that, their revenue stream will going to be stable because of the diversification of the product, because of the certain issues which they are now resolving. So and in fact, they have got the clearance from the Goa facility also, if I remember it correctly. So recently they have got the clearance for the Goa facility. So on the back of capacity expansion, new product launches, I think Cipla is well placed to cater the opportunities present in the sector. Now, talking about Sun Pharma, I think the valuations are quite stretched, first of all. So that is one major point about the Sun Pharma. And in fact, we have seen that they have outperformed the IPM market, Indian pharmaceutical market, in the volume growth. So that I think, and it will continue to outperform IPM regarding the volume. So in Sun Pharma, we are positive, but just on the valuation concerns, we are not giving a buy rating, and we are giving a hold rating on this counter. So Cipla, we are giving a buying rating, but for Sun Pharma, it's a hold rating from our side.
Right. So that's with regards to where pharma as a sector goes as well. But let's move on to Bajaj Finance. An interesting one, but they've gone ahead and tweaked their LRS plan, and they've actually gone ahead and unveiled a new strategy. And this is with regards to their 5-year strategy. Let's first get in Harsh to get us more. Harsh, firstly, Investor Day, a new strategy coming at play. The stock has been a downer, no major moves in the last 1 year. Do you think this is something which will give it a fillip?
Well, it's already doing that, Hiral, as we speak. But that apart, let's talk about the fundamentals. Let's talk about the changes. They've introduced 2029 now, an additional year added to their 2028 plan. And let's quickly look at changes which they believe have happened over the last year with regard to their guidance. First off, with regard to market share, 1% market share in payments is now what they're targeting versus the 3% earlier. So that's a sizable reduction where market share is concerned, and thereby they've changed even the larger goal. Viable payments players, one of the viable payments players. So not the leading, but one of the viable is what has been introduced in their guidance. The third one, they've raised their customer franchise guidance. 15 crore customers is what they were anticipating till FY28. they've hiked it to 20 crore by FY29. Now that's a sizable hike, and that also is a large share. 15% of India largely is what they're looking to capture by FY29, which is extremely large as a market itself. Not too many entities, banks, NBFCs having that kind of a market. In fact, the only one I can think of is SBI and possibly a Paytm. So the only two players which will probably be larger than Bajaj Finance. Now, fourth point here is AI. They are looking at pushing AI-led consumer platform solutions, and that's what they are really looking to do. Adopt an AI-first organization culture, and thereby also cost efficiency is what they are looking to focus on. They are aspiring for sustained growth and improved productivity through AI-led cost efficiencies, and that's what they are essentially looking to do. In terms of strategy, how are they trying to play this out? MSME is going to be the next big growth engine. They are looking to build market leadership in personal loans, which they already have, gold loans, MFI and two-wheelers, retain those. Optimize auto loans is what they're looking to do with regard to growth. Create viable payments businesses, 1% market share, we did speak about that, and new product lines being green financing and corporate leasing. This is something that they will get into. Analyst ratings currently penciling in a 14% upside to the start of trade today, the price at the start of day today, and 72% analysts have a buy rating on this counter. So definitely analysts being constructive, expecting some bit of outperformance from the counter going forward.
Right, that's going to be an interesting one. Thank you, Harsh, for taking us through all the details. Astha, how are you looking at a Bajaj Finance? Not done anything in the last 1 year, but it seems analysts are absolutely positive. Do you think the 5-year plan is going to do the trick?
Definitely. And one thing more, in fact, a few days back, in fact, they have just given the news that they are exiting their co-branded, card business also. So in fact, we believe that it is also going to have a minimal impact because their asset quality is very strong, especially in their B2C loan book. So that is really creating optimism in the counter to us. And secondly, the valuations are now also at the reasonable level because we believe that they are now trading at price to book multiple of around 3.5x, which looks to be reasonable because historically the valuations were quite high. So in the light of these two factors, we believe and their long-term strategy, definitely this company is going to be a very good long-term investment pick, and definitely we are positive on this counter with a price target of more than 8,000 we are giving to this counter.
Right. Thank you, Astha, for that. Now, with less than 3 weeks left for 2025, what should you buy? JM Financial has issued a list of top picks one should consider buying this new year. Puneet joins us now. Puneet, what's on JM Financial's shopping list?
Well, it's across sectors, Varsha, definitely, and that's one of the most important points of the report. Now, apart from that, we'll be able to see the picks live on your screen. So the first one is, of course, Axis Bank. It's been one of the key players in the private sector bank space. They are seeing a 22% upside. But what's key is they're mentioning that Axis trades at 31% discount to someone like an ICICI bank. So the valuation comfort is still there. Something like a Nippon AMC has also grown very well. The equity AUM or assets under management has grown roughly 67%, which is the highest among other AMC listed players as well. So watch out for this stock. The third one's Maruti. Now, Maruti has seen very strong upside, of course, 35% with JM Financial sees, but the average selling price growth is owing to a favorable shift in, multiple powertrains. So people are upgrading to SUVs. That's going to benefit the margins as well and increase revenue because of the higher cost price of SUVs. The other part is Samil again. So this is Samavardhan Motherson, a very, very renowned auto ancillary company. Now, they mentioned that, this company will continue to outperform, led by higher content per vehicle with the increasing technology that the company is doing. Next one's Ahluwalia. It's seen a very strong order book of roughly about 16,200 crores for this infra player, and that's roughly 4 times its trailing revenue. So, it gives a lot of revenue visibility as well. When you move on and look at the other companies such as KPIT, now they're seeing the very strong pipeline for this IT tech company, and with its focus on the automotive sector, with the enhanced technology that we are seeing, it is going to be one of the key players. For Z also, we've seen that, the Z-Sony merger has, post failure of the same, they're expecting that valuations are quite comfortable at 13 times price to earnings. So that's one is also on their list. with the other ones like Havells also doing very well. They're expecting a 15% CAGR in the financials. This is despite whatever losses that the Lloyd business might do. They're expecting Lloyd to be profitable on the EBITDA and PAT as well over the next few years. Finally, just to round up the list, Cyan DLM, again one of the leading EMS players where the valuation comfort is there. They are seeing that roughly about 44% CAGR in terms of revenue over the next 3 years. Metropolis also, we had the acquisition announcement yesterday of Core Diagnostics. They are seeing a reduction in competitive intensity as one of the key beneficiaries for Metropolis. And Global Health, another hospital chain. They operate the Medanta hospitals in the country, and they're saying that the upcoming major hospitals in Noida, South Delhi as well as Bombay over the next 5 years will be key triggers. And finally, BHEL, very big upside that JM Financial sees. They've already received order of 9 gigawatt and under construction of about 31 gigawatts of thermal projects. So that's going to be one of the key pivots. So these are the 12 stocks that JM Financial like across sectors, and one of the key reasons, as we mentioned also, is that it's across sectors, so diversification is one of the key upsides as well.
Well, right. Thank you, Puneet, for such details. Now, Astha, so Metropolis. So I wanted to ask two stocks to you. One is Metropolis, wherein there was this news yesterday that they acquired Core Diagnostics. Now, because Metropolis is not much into oncology and Core Diagnostics is into oncology, so this will increase their oncology contribution from 4% to 10%. Do you like this stock?
Yes, we do like this counter. First of all, would like to recommend the price target for Metropolis Healthcare. So target can be set at around 2400 to 2450. Now talking about this counter, first of all, we are positive on this counter because on the back of the financial performance also in that space, we think that it has shown good numbers because now their focus on growing top line by 13 to 15%. This is what even the management has quoted in their con call, I suppose. So now they are focusing on growing their top line to these levels. So definitely it will give a boost to the financial performance, and that is why, in fact, they are looking for some inorganic growth also. Their focus is on the margin expansion along with the network expansion. So I mean, if I combine all these points, definitely it is signaling that management is very much focused towards increasing its top line as well as bottom line. So if we take account the 13 to 15% top line growth for the coming FY25 and 26, then definitely this counter is well poised to show returns from here. Positive on this counter, recommending a buy with a price target of 2450 at the initial levels.
Right. Metropolis is done. Now, any other counters that you are bullish on? You say Dr. Lal, then you have Vijaya Diagnostics also, which is more into, radiology.
So with the Vijaya Diagnostic, there is one major issue which we believe that is why this counter is not looking so attractive to us, and that is they are a regional player because now they are increasing their presence pan-India. But still, if I look after Vijaya Diagnostic, major concentration, it is in the south. In fact, in the Pune also, they've started expanding. But I think it will take another few years for this company to become a pan-India player, and the kind of valuation which a pan-India player gets, the regional player never gets such kind of valuation. So although Vijaya Diagnostic is looking very strong to us from their financial performance perspective, but still we believe that some more expansion is needed to justify that, and hence we are just giving a whole recommendation, but our buy recommendation is with Metropolis.
Right, a buy rating in terms of Metropolis is what Astha is looking at. Astha, another topic from JM Financial was the Ahluwalia contracts. Now, if you're looking at Ahluwalia contracts, the stock didn't really perform initially in terms of the second quarter because the numbers were slightly weak, but it started to bag orders now. What would you advise? Good time to buy?
Yes, one can have a look on this counter. Because what we see that the weak quarter was there in their Q2 performance, the performance was not very strong. But now we really need to see whether they are able to improve their margins in H2. Although we have seen now they are bagging some new contract, and in fact, a current order book is also very, very healthy because they have an order book of around 16,193 crore, which I believe is almost 3.9 of their book to bill ratio. So good order book they have, and in fact they are now bagging new orders. But we really need to see whether they are able to show the strong improvement in the margin or not. So on that basis, we are positive on this counter, but not much upside we are seeing. Maybe one can have a hold rating on this counter. We are giving a hold rating on this counter, so one can have a hold on this counter with a price target of around 1200 to 1250.
Right, so hold on Alu Alia contract. Well, moving on, if you see Vishal Mega Mart, so the next theme that is in focus is IPOs. Now Vishal Mega Mart Vishal Mega Mart's IPO opens for public subscription today. The issue size is 8,000 crores and the issue price stands around 74 to 78 rupees. Sajid spoke to the CEO and MD Gurendra Kapoor about their expectations from the IPO and the way ahead. Let's hear what he has to say.
We have enough cash on our books to take care of all our expansion needs. We are a profitable business. We generate free cash every year. So that is totally well taken care of.
You give us a sense of the business that you do because you mainly cater to the mid and lower income groups through your supermarts. Give us an idea of which are the regions where you do it and what is the kind of average order value that you sell in these cities.
So we are a pan-India operation. We have registered a revenue of 8,900 crores last year with 626 odd stores present in 403 cities across the country. Brief glimpse at our financials will show that we registered a same-store sales growth of 13.6% last year. Our EBITDA margin was 14% and our PAT margin was 5.8%. Our revenue typically grows at a CAGR of 26 odd percent, EBITDA at 25% and a PAT at 50.9%. Our return on capital employed, Sajid, last year was 71 odd percent, and we have generated free cash of close to 29 billion rupees, which is approximately 3,000 crore rupees in the period FY22 to Q1 25. The mission and the goal of the business is to make the aspirations of the middle and the lower middle income group India affordable through our fashion-led hypermarket format. As you know, now the internet penetration in India is close to 1 billion people. Because of this, people are seeing basically the same content all over the country, and therefore there is a convergence of aspirations which is happening amongst the less and more affluent. Our role quite clearly is to make the aspirations of the middle and the lower middle income group India affordable. We do it in 3 categories: clothing, general merchandise, and FMCG. The unique feature about our business is that of our total revenue, about 72 to 74% comes from our own private brands, which have been developed specifically by us, targeted at middle and lower middle income group India to make their aspirations.
That's with regards to Vishal Mega Mart IPO. In fact, other 2 IPOs that are on the anvil is Sai Life Sciences that we'll be looking at as well, and the other one is IKS. Let's quickly listen into both these bites.
I think if you look at the overall trends, I think India is in for a multi-year growth cycle in the CDMO sector. It's driven by several factors at this point. A lot of Indian companies over years have developed skill sets to be very competitive globally in the CRO sector, both in discovery and development. And there are a couple of global tailwinds at play. One is what we call the Biosecure Act, which is a new law which is coming in the US, which is mandating that companies in the US who sell, US and Europe, who sell to the US government have to stop working with some of the largest companies in China. And this has created a momentum for companies to start looking at alternative manufacturing in Europe and India. And given the scale of what India is compared to China, the upside potential is very, very significant in this business.
Indian healthcare is going to be a huge opportunity in the future. As you know, chronic lifestyle disease as a result of our more sedentary lifestyles is plaguing India as much as it's plaguing anywhere in the world. And so as the Indian healthcare delivery ecosystem matures, as the physician market consolidates, as health insurance becomes more and more pervasive and health insurance starts to reimburse for physician-based care in addition to hospital-based care, I'm sure a similar model would manifest itself in India, and hopefully at that time, which I think is still several years away, we might be able to leverage all of our learnings from the US healthcare ecosystem to bring them to the advantage of India.
Right. Asla, let me come to you. If you can give us your quick view on all the 3 IPOs, subscribe or not. We have Vishal Mega Mart, Sai Life Science, as well as IKS.
So Vishal Mega Mart, it's a subscribe rating and it holds a top position among all the other 5 or 4 IPOs. So Vishal Mega Mart is looking good to us because of the, first of all, valuations. They have done very decent valuations, and we all know, in fact, they have sold through their own brand as well as third-party brands. So I think the company's financial performance is also looking good to us. So Vishal Mega Mart is the first choice from our side, and recommending subscribe for the listing gain as well as long-term purpose. Second position holds by MobiKwik. So MobiKwik is also looking good to us because they are into the digital payment, and the most important point about this company is that they turn to be positive in FY24 and on the operating level as well. So in fact, if I compare their valuation with the 197 communication, that is Paytm, so on price to book multiple also MobiKwik looking good to us or reasonable to us. So second choice is goes with the MobiKwik, and here also we are recommending subscribe for listing gain as well as long-term purpose. Third one which is looking good to us is Indian Gemological Institute, which will be opening on Friday, I suppose. So that counter is looking good to us. We are recommending this counter also for subscribe rating for listing gain as well as long-term purpose. Fourth position is by Inventurous Knowledge. Here also, the valuations were good. They are catering to the US hospitality market. And in fact, we have seen one of the recent listing, not exactly in the same space, but we have seen that listing is also doing good. That is Sagility I'm talking about, although their space is entirely different. So in fact, fourth position is given to Inventurous Knowledge, and fifth one goes to Sai Life. For Sai Life Sciences, we are recommending a subscribe for the long-term purpose, but for the listing gain, we are recommending it only for the limited listing gain. So this is our ranking order. First is Vishal, second is MobiKwik, third is Indian Gemological Institute, fourth is Adventurous, and fifth is Sai Life Science. For Sai Life Science, it's a limited listing gain, but for the rest 4, it is for the listing gain as well as long-term purpose.
Thank you so much, Astha, for this conversation. But that's all the time we have on the show. Stay tuned to NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur,
Benchmarks trade higher at noon after a flat start. The Nifty is about 24,600, whereas the Sensex rises about 81,500. Broader markets outperform. All sectors barring media and PSU banks trade higher. Metals top of the list of winners, followed by FMCG, auto and realty. Metal index outperforming, gaining on the back of China's stimulus. Meanwhile, steel stocks are high on a potential 25% safeguard duty on imports. And Radhakrishnan Damani's DMart takes a dip lower by over 33% as Goldman Sachs maintains sell on the stock as discounts reign on the company to combat competition. And Mint Street's new boss is Sanjay Malhotra as he takes charge as the 26th governor of the Reserve Bank of India for the next 3 years, effective today. Hello and welcome to NDTV Profit. You're watching Market IQ and I'm your host Mika Barve. Let's just take a quick look at how markets are faring right now. Where we had a flat start to the day. The Nifty 50 is trading not much significant gains, up about 0.13%. When you talk about the stocks on the Nifty 50 in terms of stock performance, you have Shriram Finance, which is the top gainer. It's up almost 2.5% right now, followed by Britannia, Bajaj Finance, Nestle, Ultratech, all seeing gains of over 1%. When you look at some of the counters that aren't doing so well, we had Adani Ports a little bit under pressure, down about 1%. HCL Tech, SBI, these counters, seeing cuts of over 0.5%. Broader markets do continue to outperform, not by much, but you have the Nifty Small Cap 250, which is the clear outperformer. It's up almost 0.3% right now. When you look at some of the significant stock movements on this index, and we have stocks like Jupiter Wagons, which has gained over 11%, PNC Infra up 9% right now, as well as Swan Energy, which is up over 9% as well. Some of the counters that aren't doing so well, we have ITI heavily under pressure, seeing cuts of over 7% right now, as well as some weakness in counters like Siet, Brigade Enterprises, CCL seeing cuts of 2 to 3%. When you look at the sectoral indices, most of them are in the green. You have the Nifty Metal top performer, up almost 0.6%, followed by auto, the FMCG pack, the healthcare index, and the ones that aren't doing so well, you have the PSU banking, media, as well as the energy space. But let's first start with the consumption sector, and Citi has released a note on the takeaways of the investor meet of some consumption companies. Mahima joins us to tell us what Citi prefers and what it's cautious on.
Basically, they met 30 investors and they've come to some conclusion as to what the trends look like right now in the consumption space. Well, they expect weakness in urban demand to be more than that of, it'll probably offset the rural recovery that is already taking place in the consumption space, and investors remain selective and prefer companies with least earnings downgrade risk. And they, in terms of stock specific action, they accept faster growth at Varun Beverages, but investors are cautious on categories with increased competitive intensity. Now, this includes paints, grocery retailing, as well as jewelry. In terms of HUL, GCPL and Britannia, they remain cautious. HUL because of muted demand. In terms of Britannia, because market share gains in inflationary environment are putting kind of pressure on the margins. And GCPL, in near term, there are challenges, which is why they are cautious. In terms of ITC, Dabur and Nestle, they're saying that ITC has an overhang in terms of the GST rate. Dabur, there's a limited downside but lacking catalyst, and Nestle is lacking growth drivers overall. Now, in terms of the jewelry space, they remain cautious on Titan because, and comparatively, they're comfortable on Kalyan's store expansion and the asset-light model that they're picking up. In terms of the QSR space, they have mixed views between Jubilant and Devyani because of the underlying demand which remains subdued. Trent, investors had questions on risk to store expansion. DMart, they are of course raising questions with respect to the quick commerce, growth that is taking place. And lastly, in terms of Asian Paints and Pidilite, investors remain cautious amidst the kind of competition that is increasing. And Page Industries and Bata investors, they await signs for turnaround in this particular space. So this is the overall view and the key takeaways from the investors meet.
Thank you, Mahima, for giving us those details. In fact, the CCI Global Economic Policy event is underway, where some key stakeholders of the FMCG industry are addressing the needs of the sector today. The Finance Minister, Nirmala Sitharaman, addressed the event as well, where she spoke about the rising challenges of climate change and how it impacts the businesses.
Climate change is something for all of us to commit ourselves, like the intensity with which we commit for removal of poverty. I'm sure most of us in every country, advanced or developing or emerging, commitment to removal of poverty, commitment to working together with our poor at different levels and different scales is a commitment which all of us are living with and wanting to perform on. So equally, I would think it's important that on climate, we commit ourselves to make sure our people don't lose their hard-earned wealth, hard-earned small assets, their lives to climate vagaries. Extreme weather events are taking away hard-earned resources of the poor people. Are we giving them resilient infrastructure? Are we giving them a livelihood which they can quickly restore after a major event? Are we giving them such insurance, let us say, to take care of such economic disaster which may fall on them? So I think climate challenges will have to be looked at from various different perspectives rather than just emission.
Another consumption major, Avenue Supermarts, is in focus, trading lower after Goldman Sachs maintains a bearish stance on the stock. Mahima is joining us. Mahima, what can you tell us about this note?
Basically, they've maintained sell with a target price of 3425, which was earlier 4000. Now, they're saying that DMart is increasing price discounts to maintain the competitive advantage. We've seen that quick commerce players like Zepto and Blinkit are going big when it comes to discounts. Zepto's now Super Saver is almost matching the price of DMart prices. So to maintain that, DMart's has taken almost a 25% discount to its MRP in December 24. In terms of the DMart's addressable market is only 1/5 of the total $500 billion market is what Goldman Sachs is saying, and this is because they don't cater to rural, meat or intoxicants category as per Goldman Sachs. Now DMart has grown headroom beyond top 10 cities, but this has been slower, and this will be slower going forward because they don't lease or rent their stores, they basically own the stores. So this might hinder their overall demand and expansion as well. Lastly, they have said that they cut earnings multiple by 4%, 6% for FY26 and 27, and also 6% by FY27, and they lower the multiple to 60 times going forward. That is the PE multiple. So this is the overall view of what Goldman Sachs is saying about Avenue Supermarts.
Thank you, Mahima, for giving us all those details. From consumption, we now move on to financials, and Bajaj Finance is another stock that's buzzing after the company unveiled LRS, a five-year strategy with a 12 to 24-month breakdown. Now, Harsh joins us to give us the key details on that. Over to you, Harsh.
Let's talk about the fundamentals. Let's talk about the changes. They've introduced 2029 now, an additional year added to their 2028 plan. And let's quickly look at changes which they believe have happened over the last year with regard to their guidance. First off, with regard to market share, 1% market share in payments is now what they're targeting versus the 3% earlier. So that's a sizable reduction where market share is concerned, and thereby they've changed even the larger goal. Viable payments players, one of the viable payments players, so not the leading, but one of the viable is what has been introduced in their guidance. The third one, they've raised their customer franchise guidance. 15 crore customers is what they were anticipating till FY28. They've hiked it to 20 crore by FY29. Now that's a sizable hike, and that also is a large share. 15% of India largely is what they're looking to capture by FY29, which is extremely large as a market itself. Not too many entities, banks, NBFCs having that kind of a market. In fact, the only one I can think of is SBI and possibly a Paytm. So the only two players which will probably be larger than Bajaj Finance. Now, fourth point here is AI. They are looking at pushing AI-led consumer platform solutions, and that's what they are really looking to do. Adopt an AI first organization culture, and thereby also cost efficiency is what they are looking to focus on. They are aspiring for sustained growth and improved productivity through AI-led cost efficiencies, and that's what they are essentially looking to do. In terms of strategy, how are they trying to play this out? MSME is going to be the next big growth engine. They are looking to build market leadership in personal loans, which they already have, gold loans, MFI and two-wheelers, retain those. Optimize auto loans is what they're looking to do with regard to growth. Create viable payments businesses, 1% market share, we did speak about that, and new product lines being green financing and corporate leasing. This is something that they will get into. Analyst ratings currently penciling in a 14% upside to the start of trade today, the price at the start of day today, and 72% analysts have a buy rating on this counter. So definitely analysts being constructive, expecting some bit of outperformance from the counter going forward.
Thank you, Harsh, for giving us all that information. Moving on, even as the street waits eagerly for government to start spending, we've taken a look at the spending by the private sector. Now, we've analyzed the Nifty 50, barring the financial companies, the cash balances of the same, and H1 of FY25 cash balances stood at 2.72 lakh crores. Now, the cash balances are unchanged when you compare them to last year, and that means, and this comes despite the revenue growth. The oil and gas sector is holding the most cash at 1.15 lakh crores, and the IT companies follow next at 53,900 crores. So now, where are the companies spending cash? Because they are seeing revenue growth and the numbers remains unchanged. So there's a large outgo of cash towards the investment activities part of the cash flow statements, but there's been marginal spends on plant and equipment purchases, which is a key indicator when a company is spending on capex. And when you look at the evidence of the lower capex spends, you see the company's revenues. Now, H1 gross revenues are up 5.18% year on year, but revenue growth from operational activities is 4.9%, and the other income growth has outpaced that at 14%, and other income growth is most noticeable in the healthcare companies as per analysis at 74%. And so the other income of large firms are actually seeing an surge, and this income is originated from activities that are not tied to core operations. They come from asset sales, and they also come from proceeds from investments in financial instruments. So while we're seeing a growth in revenues in the Indian companies as well as the the large companies of the benchmark, the way they're spending their cash is more on investment activities in terms of financial instruments and not the capex that they have set for the following years. But we shift our focus to Adani Ports, which is trading lower, but it's seeing profit booking in trade. The company has withdrawn Development Finance Corp funding request for its Colombo Port project, and we have Anushi joining us to tell us all the details.
That Mika, Adani Ports definitely in focus today after the announcement came, which was a surprise, by the way, that they have opted out of US funding for its Colombian port project. Now, what was happening that it has opted out of US funding as mentioned, and are now going to be self-financing that Colombo port project in Sri Lanka itself. So what has happened is now that they're funding it itself, this would be through the route of internal accruals that we are looking at, and withdrawal was from the request was from the financing of US DFC, which is US International Development Finance Corporation. So the main implication that we are looking from this development is that firstly, it has sufficient internal accruals in place, and second is the robust capital management also that is taking place. Now, coming to this adjustment in particular, last year what had happened was Adani Group had received $553 million in funding, and this was, as mentioned above, from the US International Development Finance Corporation. This included operations to support the development, construction and operation of their Colombo West International project, wherein Adani Group was going to play a big part by aiding the role in this $1 billion fund fusion which is happening in Colombian terminal project, which is also one of the biggest investments for any of these port projects that we are looking for Sri Lanka. In this, Adani Ports held over 51% of this venture, and the project is on track to be commissioned by early next year onwards. So Adani Ports had committed over $700 million to develop this terminal as we speak, and this investment is expected to make the Colombian project as the largest and deepest container terminal in Sri Lanka. So definitely a lot of emphasis on how Adani Ports would do once these operations would be in, once this project would be in operation from next year onwards, and how it has sufficient internal accruals for this project to take place.
Thank you, Anushi, for giving us all those details. Yes, Adani Ports is slightly under pressure. This could be profit booking, but even its peers, like something like a JSW Infra, is also not doing so well in trade today. But we do have, certain stocks that are buzzing on the back of order wins. I want to pull up the chart for HG Infra, which is gained quite a bit in trade because of a latest order win. We also have NTPC Green, which has seen over a 1% uptick because of an order win, and something like a BEML as well. And we have Anushi who stayed back. Anushi, a whole host of stocks buzzing on the back of these order wins. Can you tell us more about the orders that they've gotten?
Hey Mika, so another day for order wins as we speak. HG Infra continues to be in focus. They've received a letter of award for 763 crore of project from Ministry of Road Transport and Highways, which the contract would be executed in the next 2 years itself. Do note that the company is targeting an order inflow of 11,000 to 12,000 crore for FY25. Even in the recent orders, there have been a couple of order wins for HG Infra, which is what makes it so interesting. It also emerged as a qualified bidder for a 250 megawatt tariff-based battery storage energy system by Gujarat Urja Vikas Nigam. Second, coming to NTPC Green now, the subsidiary has won a bid to develop a 500 megawatt of solar power project. The project tariff being set at rupees 3.52 per kilowatt hour. Order includes a 250 megawatt energy storage system also, and letter of award from SECI is awaited for this. Coming to the last one on the list is BML. Looking at two order wins in these last 2 days. One is they've received a contract worth rupees 136 crore from the Defence Ministry. This pertains for their high mobility vehicles in the battlefield surveillance system. And if you look at yesterday's update, which came post market hours as well, the company had received an order for rupees 833 crore. Another order that we are looking from Ministry of Defence for supply of a 50-ton trailer, which would aid the transportation of these battle tanks. So order book, if you look for BEML, that stood at about 11,453 crore as of September end of this year.
Thank you, Anushi, for giving us all those details. We now shift our focus to the metal pack. Now, positive commentary in the Politburo meeting at the start of the week did drive some optimism for better, better demand and a better economic picture for China, and that's gained in some of the metal counters. But we have steel players that are in focus. So JSW Steel, it's paired all of its gain. It's now trading with a negative bias, but you have Tata Steel, something like a Steel Authority of India, as well as JSPL that are trading higher. Now this is after media reports have cited that the Steel Ministry has proposed the Finance Ministry for safeguards duty on the cheap steel imports. Now this proposal is of a 25% duty, and the move aims to restrict the cheap steel imports that have been impacting the industry. Now Nuvama has come out with a note on the potential impact of the same. They do expect safeguard duties to come into place, but they expect it to be lower than 25%. The imposition of duties will restrict the imports over a medium term and may not have short-term quick immediate effect. They do say that the potential duties, as coupled up with a good seasonal quarter, could allow the Indian players to take some price hikes, which could be in the tune of 2,000 to 2,500 rupees per ton, and this price hike could come in the next month itself. They also have stated that the earnings improvement has already been factored within the Indian steel stock prices. They do say it's a good it's a right time or a chance for investors to book their profits in counters like JSW Steel, SAIL, Tata Steel, and their top pick in the steel pack remains Jindal Steel and Power. Lastly, their overall view in Indian steel industry, Nuvama did highlight that the exports, the muted exports are a bigger concern actually. They say that HRC prices are trading at a 2% discount to the landed cost of imports, but they do expect India to have excess hot rolled coiled or steel supply over the next 2 years because we have large players that are have already commissioned capacity in the tune of 17 million tons per annum. They do expect the incremental flat steel production of around 21 million tons over FY25 and FY27. That's why the brokerage is saying that India needs to bump up its export market to push the additional volumes. But this is only possible if China dials down the exports. So that's the overall outlook on the steel sector. But we shift our focus, and it looks like 2025 will be a healthy year for the pharma industry, and that's not me, it's HSBC saying that. The firm believes the peak generic of Revlimid sales and differentiated launches in the US will take Indian pharma to new heights. We have Varsha joining us with all the key details on this note.
So yes, HSBC's top picks, you can say, include your Cipla, your Sun Pharma, Lupin, Torrent and Aurobindo. Now what they say is 2025 will be good year for these companies, driven by peak sales of Revlimid, that is their cancer product, and the new launches in the US like GLP-1 drugs. Your GLP drugs are nothing but the obesity drugs that people are pegging on. Now this will offset the decline in Revlimid sales because the patent expiry of your cancer drug, that is Revlimid, is going to be in 2027. Now the focus will be on executing key product launches in the US such as Abrixin for Cipla and expanding into complex generics like inhalers or peptide injectables, which are actually critical to support US growth for these companies after the Revlimid cliff. Now HSBC is expecting that Indian pharma companies will likely start launching generic GLP drugs in near future, and the Indian pharma market is expected to grow in a high single digit backed by price increase and new launches. Also, improving biotech funding and diversification strategy should help sustain interest, though revenue will flow later on according to HSBC. However, HSBC do note some risk like potential delays due to FDA inspection, intellectual property challenge and rising raw material costs due to geopolitical issues that we have. So overall, if you see, they prefer Cipla, Sun Pharma, Torrent Pharma and Lupin for their solid growth potential, with Cipla and Sun Pharma well positioned despite the eventual loss of Revlimid sales.
Thank you, Arsha, for giving us all those details. And now it's time for an exclusive. Now, sources have told NDTV Profit that the CCI won't probe the complaints filed against quick commerce platforms. So we have Shrimi joining us with more details. Shrimi, what are you picking up? What are sources telling you?
Clearly, some relief seems to be coming, as what we are picking up from our sources is that Competition Watchdog has reviewed all the complaints against these quick commerce entities like Blinkit, Zepto, etc. What we are getting sense from our sources is that prima facie there is no violation emerging as far as competition laws are concerned. In fact, the business model of these entities which is in question is also not appear to be anti-competitive. The market dominance factor is also not looks like into play because there are multiple players already in this segment. And what CCI is learned to be believed that they don't want to hurt the innovation in this particular segment because the sector is relatively new, at a nascent stage, still evolving, so they don't want to sort of hurt innovation because it's somewhere helping consumer at large. Though CCI has all the power to exercise here, where they could launch the probe suo moto irrespective of the fact that there is any formal complaint against these entities by the third party or not. Remember, the DPIIT, which is the part of Commerce Ministry, has referred the complaint against these entities over unfair trade practices to CCI to look into, following the complaints they have received from the Retail Distributor Association, alleging that their growing presence is somewhere hurting these small retailers, and that's why they sought government intervention to look into the matter. But CCI clearly has a different view here. They are not going ahead with a formal probe. They are saying this is not the time, for now at least, to launch any probe against these entities.
Thank you, Shrimi, for giving us all those details. And moving on, in the latest, Sanjay Malhotra takes charge as the 26th RBI governor effective today. Malhotra will be taking over a successful 6-year tenure of Shaktikanta Das. In fact, the new RBI governor will be addressing the media on the road ahead for the economy at 3 p.m. today. And with that, that's all we have on the show for now. But do stay tuned to NDTV Profit. Lots more lined up on the other side.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Hello and welcome to the Mutual Fund Show. I'm Neeraj Chawla. The next 25 minutes we'll talk about the mid cap and the small cap category. Now the reason why we thought of doing the show today, one, if you saw what the AMFI figures yesterday, showed about mid cap and small cap flows, while active large caps flows were lower, while large cap flows were lower, while flexi cap flows were lower month on month, mid cap and small caps had an uptick. So therefore, that was one good thing that happened, that that end of the market is seeing inflows. So that is part one. Part two is that if you look at the last stock at the small cap end of the market, stock number 250 on the all market cap, right? That value, that market cap is northwards of 30,000 crores. The small caps are now very large, and therefore they are liquid enough. And therefore, the question that I'm asking to everybody is that why should one hesitate from buying into mid cap and small cap funds? Because these funds do have the option of buying into fairly liquid names, and all of these in some sense can also be leading companies in their sectors. You don't have to be a Nifty 50 company to be a leader in the sector. Let me pose this question to our two experts today. Santosh Joseph, founder of Germinate Investor Services, Prablin Bajpai, founder of FinFix Research and Analytics. Both of you, thank you so much for joining in. It's not a very easily accepted point, and the general the general advice these days, Prablin, I'll start with you on this, is that stick to the safety of the large caps, maybe invest more in large cap funds because mid cap and small cap valuations are high. Agreed. But it's a very large bucket and now a very liquid bucket as well. Why should people not invest more into mid cap funds or small cap funds?
Good afternoon, Neeraj. Good afternoon, Santosh. I think a very important question, and Neeraj, my answer would be that you should continue to invest in the small caps and mid caps as well. And I would want to, give some data to sort of support my answer here. Of course, the valuations, what we've seen in the past, let's say a year and a half, the kind of inflows that we've seen, that's been riding on the spectacular performance that we saw in 2023. And of course, that is somewhere, on the pillars of, let's say, decent corporate earnings, the domestic liquidity that we've seen, and the newer interest by the investors in segments where they feel that the returns have been good. So recency bias to some extent has been there. But if we just go back, let's say 2016 onwards, and I'm taking 2016 because we have the small cap 250 index since then. So if you look at 2016 onwards, in the past 9 years, including 2024, we've seen year-wise, if we see corrections in the mid-cap space in 2 years, in the small cap space, the 250 index in 3 years, where it was negative on a calendar year basis. Now, if you are going and putting money as a lump sum, then you can be in for a very, very bumpy ride because it takes a decent amount of time to recover. So the biggest correction that we saw in the recent times since 2016, period-wise, has been the COVID, when mid-caps fell by about 44%, small caps fell by about 67% during this period from January till March. The second big correction came in October 21 till about June 22, when we saw the small caps fall by roughly 26-27% and the mid caps fall by about 21%. And the length of that period was from 154 days for the small caps till about, for the mid caps, it was about 245 days. And the recovery for the small caps took 260 days. So this data and the other corrections that we've seen, since 2016, the biggest corrections, the biggest 5 corrections that we've seen in the small and mid cap space, Neeraj, 3 out of those have been like in this recent time, post-COVID, basically. So the point I'm trying to make here is that if you're looking to invest, there is high growth potential, absolutely amazing returns you can get from these two segments, but then you have to be prepared for a bumpy ride. And that is why you need to take the SIP route. Because if you started investing via SIP, let's say in April 2016, after 3 years, your returns in the small caps would have been negative and in the mid caps at a very, very meager level. So if you're prepared for that, you must invest in this segment. But if you're seeing returns of 20-22% today, that's the return the investor is going to get. But you have to, sort of navigate through those years of frustration when you would start questioning that, probably I could have got better in a fixed deposit. So if you have the patience, you have a time horizon of 6 to 7 years, definitely continue to invest, but in a staggered manner at this point.
Okay, fair point. Santosh, is your view different? And just adding a layer of a question there, could the next few years aside of the fundamental performance, on the technical parameters be a bit different for a mid-cap fund manager, because the mid-cap fund manager currently has a much larger market cap and more liquid names to have in her or his portfolio relative to what she had, say, 10 years ago.
So, Neeraj, hi, good afternoon, and hi to Prableen. I will have to go with largely agreeing to what Prableen just said, and I also think your question, both the first one and the second one, are extremely well framed to bring out the best of this hot debate about should we continue in the mid and small cap. While the AMFI data is clear and validating that the investors like to stay in equity, number one, and number two, within equity, they appreciate mid cap and small cap a lot more, is evident. We have data to prove that right now. But I think, like what Prableen added, let me add another 1 or 2 points, that the sheer number of opportunities present in the mid and small cap have gone up multifold. For one, let's take the index. About 8-10 years ago to today, the index itself has gone up in size almost like 6 to 8 times at just an absolute level. Second is the number of IPOs that are happening. Over the last 5 to 10 years, almost every other IPO is actually a mid cap or a small cap IPO, therefore giving the fund managers and even the opportunities for mid and small caps to choose. While all this was happening, I think we can't forget about 4 or 5 years ago when we had the recategorization of what a small cap is, what a mid cap was, extremely clear watertight compartmentalization of if you're in a mid cap, what you entail, if you're in a small cap, what you entail. The growth of the index, which is a smaller mid cap, the growth of the universe of stocks, the growth of the companies where the exhibition of the entrepreneurial spirit of the Indian economy is so visible in small and mid caps. The earnings are there, the companies are doing phenomenally well, they're leaders in their category, they are having fantastic margins, and they're also willing to invest money into fresh capital expansion. In fact, today, one of the big questions when we ask about CapEx is that these are the guys who are doing CapEx. Either maybe they're first time CapEx or they're borrowing money to do CapEx, but clearly there's an abundant provision here. So what does this summarize to? That do not look at small and mid cap just because they got a good run and just because they got good flows as a negative sentiment. If you are still going to be aligned to the portfolio construct that you need from a risk origin basis, from a risk appetite basis, it's not bad or not negative to be in mid and small caps, but be clear, align it to your time and align it to your risk horizon. There is still opportunity as long as you're not chasing just the immediate past performance. From a fund manager or a scheme, there's enough of room and there's enough of comfort to manage funds even at these high flows or high valuations or high past performance.
Okay. So I'm suffice to say that both of you do believe that, subject to a few conditions and permutation, subject to a few things keeping in mind, it is not a bad idea to invest in mid cap and small cap funds even now, despite the, let's say, for lack of a better word, the worry or concern around valuations, if somebody has a long-term point of view. Now, Santosh, I'll come to you on this. If that is indeed the presumption and the thesis under which you are now giving the recommend or advice, what kind of mid-cap funds would you believe you would be comfortable recommending to your clients or to our viewers at large right now? And everybody will do their own due diligence, of course, remember. But what kind of funds and why so?
Neeraj, I'll begin by saying that traditionally we are looking at funds based on either 3-year, 5-year performance, and sometimes we like to triangulate the fund that's done well on 1-year basis, 5-year basis, 10-year basis, and you always want to fall back on large numbers and averages to support your view. But I think today India as a market is offering opportunities for newer funds, for smaller funds, for bigger funds. If size was a constraint, then when you look at a Nippon small cap fund, it is one of the biggest in the category, yet it has been a good performer. If size were not a constraint, some of the small cap funds have great opportunities in terms of the percentage exposures they can take. I think you also are spoiled for choice today in the style of the fund. There are some who run a small cap and a mid cap hugging the benchmark. There are some away from the benchmark. Because of the vastness of the universe of a small cap or a mid cap, it gives you the reason to choose fund. In fact, my list of funds are very clear. There is an opportunity in a Bandhan, Nippon, Edelweiss, HDFC, maybe even a Franklin smaller companies fund. Likewise in like a HDFC mid cap or a Edelweiss mid cap, even a Motilal mid cap. There are some 4-5 names which is also on your screen right now, that opportunities are there in these funds. But if you suppose don't like what I'm saying, there's enough opportunity for you to even dig yourself, either on the size basis or on the style basis. But the bigger question to answer is, mid cap and small cap do offer plenty of opportunities, and you can also choose from the style. Do you want to be away from the index? Do you want to concentrate near the index? Or do you want to go in for a certain style? Not to forget the last 2 to 3 years, you had styles playing out, growth versus momentum or value. And within that, what sectors they are playing out. I think we are in for a great long runway as far as mid and small caps are concerned. And for investors, just on the basis of performance itself, you have so many easy picks to take. Otherwise, if you are able to drill a little deeper, you will get some beautiful mid-size to small-size mid and small cap to pick and choose from. Literally cherry picking can happen here.
Okay, probably an initial thought from you, then I'll get into specifics and what can be anticipated there. Remember, for both of you, I'm not asking you to give me an exhaustive list. These are indicative names, but just to give an idea to the viewers about what funds they can research as well. So probably with that disclaimer, what category of mid-cap funds, are there specific kind of funds, maybe a couple of names, and why those?
Mid-caps, Neeraj, is a smaller segment as compared to the small caps. Because, the universe is really limited from the 101st till the 250th. And you said that, the market size, of course, of those companies has risen. In 2017, it's interesting that the 101st company was just about 29,000 crores. And today, the 250th company, the last of the mid caps, is around 34,000 crores. So definitely times have changed and there's enough opportunity, but the universe still remains that 150 stock universe in the mid caps. And if you look at rolling return basis, I'm a strong believer, that is what data suggests, that, actively managed mid cap funds have definitely found it difficult to beat the mid cap index. And that is something that probably will continue to happen if the markets mature as we move from being a developing to a developed economy. And that is a phase when we'll see the downturns. That is the time when active funds can outperform. So till the time the markets are really going good, I would say that the passive strategies work better. So for investors who really have a longish horizon, who are investing for 10, 15, 20 years, I feel just pick the mid-cap index. That will be a very simple, clean strategy for you to take exposure to the mid-cap space. For those who are looking at slightly lesser, let's say somewhere between 5 to 7 year period, because the performance keep changing, so you can't keep changing the scheme every time. There are phases when growth style works, like Santosh was mentioning, there are times when value is working. Some of the good names which have on a rolling return basis, I think, consistently beaten the benchmark 150 would include names like Kotak, Edelweiss, Motilal now with Mr. Niket Shah, managing it. Then HDFC, it has been a consistent performer for the last 16 years. We have the same fund manager. So these are some of the names, I think, in the mid caps which look good. But my choice would be a simple, clean index strategy in the mid cap space.
So probably, am I getting this correct? You would choose a passive index strategy over an actively managed mid cap fund? Are you saying that?
Yes,
you are.
I would do that for my portfolio, and we are increasingly doing that for our investors. For the next 20 years, when I'm investing for somebody, Neeraj, I would 100% go in with a mid-cap passive strategy. In fact, that's what we are doing for even investors with anywhere between 6 to 7 year plus horizon now, because it's very difficult to keep looking for the best outperformer. And the difference, I want to give you data here, Neeraj.
Okay.
So for the last, if you're looking from 2016 December till 2024, which is like many years, 8 years actually. So the mid-cap 150 index has given us somewhere between 23-24% returns. Now here, the difference between the best and the worst performer is, almost 13%. So, with very fewer schemes now being able to beat the index on rolling return basis, I feel that the mid cap index would always be somewhere in the top quartile. So, you may not be in the best fund with the passive strategy, but I think it's a very, very high probability that you would be in the top quartile. And I think that should do the trick for most investors.
Okay. Prablin, Santosh, I'm just coming to you, but Prablin, just one quick follow-up to that initial answer that you gave, right? So I'm presuming that you are taking a passive strategy both for the large cap category and the mid cap category, but in the small cap category, you would choose an actively managed fund. Would that be a fair assessment, or am I wrong?
Yeah. For now, Neeraj, I would go with a actively managed fund in the small caps, but I will not hesitate to add a passive strategy there as well if it is a very longish horizon. Again, beyond, let's say, 15 years or so, definitely. And in the active space, I like schemes like the Bandhan small cap. Of course, their CIO is managing it. Tata. HDFC, the credible names, because the performers, the top performers keep changing, so we can't keep chasing returns. But these are the credible names who have sort of proven themselves over different market cycles.
Wow, 15 years. Santosh, you have clients who stay invested for 15 years?
Of course. So let me also stick my neck out and tell you, you can't argue with what Prablin's view is, but I have a thought which maybe I'd like to share. The growth of the passives or the index funds have had their share under the sun over the last few years. But just think with me for a moment that the growth of the passives and also these index strategies at some level are actually going to have an inflection point where you are naturally going to give the opportunity for active fund managers to also outperform. So therefore, I'm sticking my neck out and saying that I will choose both at mid cap and small cap. Active strategy any day over a passive strategy, number one. And number two, I'll tell you why, is because when the passive strategy is anyway going to get those flows, because people believe that it's rather to be in a basket rather than actively choose, it will give you the drift for the portfolio manager to be overweight or underweight or do stock selection and therefore naturally outperform. Because when the index itself is going to see flows, by just the process of natural selection, deselection, or weight management, there is a clear opportunity, especially in the mid and small cap, to outperform the index. So I am saying if we have a 10-15 year view, I would choose an active fund both in mid and small cap category. Now, when it comes to large cap, yes, it's a little bit of information asymmetry there because there's a small set of stocks and the flows are not equivalent to small cap and mid cap. And there's also a lot of FI flows that come over there. I would still choose maybe a combination of active and passive strategy. But when it comes to mid and small, I would still go with actively managed strategy, even if it's for 15-20 years.
Okay. Just before we get to queries, so both of you, just one quick thing, because it might get a bit confusing because there's so much of discussion we've done on actives, passives, etc. So not an exhaustive list again, but Prablin, one actively managed small cap fund that you think is good. I'm not saying it's the only one, there could be many, but one name which people can go and research based on their comfort level. One actively managed small cap fund.
Okay, I'd like to give two. Tata for the way they've managed the downturns, and Bandhan, riding on the fact that their CIO, Mr. Manish, is managing in it. I think he brings in a lot of skill sets, so I would consider Bandhan as well. So two funds started.
Okay. So Tata and Bandhan, I hope I got those right. So that's from Prablin. Yes. Santosh, what about you? Again, not an exhaustive list, just indicative.
I will go with Motilal, just a relatively new fund, less than 1 year track record. And another fund is Edelweiss, which has got a phenomenally good track record. So my first bet is Motilal and second is Edelweiss.
Okay. Viewers, remember, this is not the only set of funds that they might be comfortable talking about. Indicative list, please do your own due research as well. And come in with a longer time horizon. That is something that both our guests have said. That you need to do, because there could be a volatile ride. It could well be in the next 12 months these funds may be underperforming even to the fixed deposit. It could well happen. So come in only with that long-term view in mind. Thank you so much, both of you, for this. So this was really nice. But we have maybe a few queries, and I'd love for you to maybe try and help our viewers who have asked these queries, if you're comfortable. So the first query is from Anand. Anand is from Ahmedabad. Anand's age is 45 years. Anand is asking, is it a good idea to invest in the ICICI Prudential India Opportunity Fund? Anand is looking for a long-term investment. I'm presuming therefore over 5 years. Probably any thoughts here?
ICICI India Opportunities, Neeraj, is a thematic fund, and it is with a large cap tilt. The basic premise on which it is based is that they're looking for those schemes which are, those stocks which are currently, slightly beaten down, and there is enough opportunity for them to bounce back. The top holdings at this stage are the prominent private sector banks, then some names from the auto sector like Maruti, some of the tech companies, and little pharma. That's the top 10, the combination which is there in the portfolio currently. And I think it's a good scheme for investors to hold in the active space. But again, he has to take it more like a large cap kind of a fund in his portfolio. But I think it can be a very good scheme as an add-on to a portfolio, definitely.
Okay, thanks for that. Santosh, any thoughts here? I mean, maybe we can just take a quick thought from you as well on this.
No, I think it's a good fund, and considering its thematic, I am also confident that when the themes change or when the sectoral breakup changes, that the fund will be nimble to capture those new changes, momentums, and trends. So therefore, especially a fund like this, when you choose it well, the longer you keep, you're allowing the fund to itself naturally evolve, and it will work well for you. I think it's a good bet to continue.
Okay. The next query, Santosh, this is for you, is coming in from Mahesh. Mahesh is aged 37 years. The goal is a retirement plan. Mahesh invests 1.35 lakh rupees per month through SIPs and has a time horizon of 14 years. Okay, Mahesh is asking to review the whole portfolio. Let's try, Mahesh. I don't know if Santosh or Prableen can help very actively with that, but let's still try. So the core funds in Mahesh's portfolio: HDFC Focused 30,000 rupees SIP, SBI Contra 20,000, MOSL Mid Cap 20,000, Tata Small Cap 20,000, Tata Mid Cap 150 Momentum 10,000. And the satellite funds are HDFC Defense, HDFC Pharma, Tata Digital, MOSL Capital Market. So that's about 9 funds. Santosh, loaded question. Can you reply?
So Mahesh, it's commendable that you actually got a very nice time-bound and quantum-based plan for retirement. In fact, you start off on a good note, but I have a little bit of a difference of thought here in terms of your core portfolio and satellite portfolio, just to help you bring you up to the speed that when you choose well-diversified, either a flexi cap or a multi-cap fund, bulk of your satellite portfolio will get well represented even in your flexi cap and multi-cap portfolio. For example, whether you want to play a defense theme or a PSU theme or a digital theme, you would notice that some of these exposures are already present. You don't have to just keep adding more line items by increasing the number of funds. In fact, when I look at your core portfolio, it's good. You have a large cap, you have a mid cap, you have a passive fund, well balanced. Now, every now and then the thematics keep changing. In fact, the themes that are doing very well today possibly may not do well 4-5 years, considering you have a 15-year horizon to do your SIPs. Similarly, the ones that are doing well today were not anyway present 4 years, 5 years ago, and were not relevant then. So my simple take is, while I appreciate your plan for retirement, I appreciate your SIPs and the effort that you've taken to break it down, consider how you can reduce the satellite exposure and increase your core exposure to well diversified funds which have the luxury of keeping the themes and sectors and the opportunities present in the market flexible. I think you'll do better.
Okay. Thanks for that, Santosh. Last question, probably this is for you very quickly. Vimal, age 50 years, wants to invest 5,000 rupees SIP on Contra, Flexi and equity hybrid funds, looking to create 25 lakhs in 5 years. Is this a viable plan?
Okay, so he wants to invest in Flexi, equity hybrid and Contra with a 5-year view. 5-year view is okay, Neeraj, with these themes, a Flexi cap, Contra and equity hybrid, definitely. I'll have to do the math actually to tell him whether 25 lakh can be created or not, but looks slightly difficult, just with a back of the envelope calculation. I think he'll have to increase his SIP amount to reach his goal. And with this SIP of 5,000, honestly, I think he can just split it between two schemes for now. So Flexi Cap and probably a multi-cap, I think, a combination of something like that. 2 funds should be good enough. 3 aren't really needed.
Yeah, but just very quickly, I mean, even though we haven't done the math, Vimal, but it's easy to do. I mean, 5,000 a month will independent of however benign Prablin might be, you will not reach that goal. No matter what kind of returns do Indian markets create, because frankly, that returns are very high that are needed. I don't think that can happen. So you'll need to change the size of your monthly SIP. I'm presuming 5,000 is split between everything and not 5,000 individually. But even then, it might be slightly difficult. But okay, on that note, Prablin and Santosh, thank you so much for taking the time out and being with us on this leg of the mutual fund show. Really appreciate your time.
Thank you, Neeraj.
Thank you.
All right, and viewers, lovely doing this show today. Thanks for joining in. Stay tuned to NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day.
Hello and welcome. Good afternoon. You're watching India Market Close here on NDTV Profit. I'm Harsh Saita. Quick check on where markets are at. We're about a 1/5% higher when the Nifty 50 is concerned. We're holding on somehow to 24,650. But if we can have the intraday chart, we'll largely see it's again a range-bound day of trade. We've had one too many of these, and one of those is again coming up today. Just about 108 odd points is where the Nifty is trading in. So it's a tight range in which we are trading. We're obviously off the day's lows, but we're off the day's highs as well. So pretty much an even keel there. Let's look at the heat map for the Nifty 50. Talk about some counters which are doing well. Bajaj Finance, top of the pack. Shriram Finance, so NBFC is leading the play here, at least today. You're seeing some bit of cement. Ultratech in focus on the back of that, 1.5% on the back of hike in prices as well. Adani Ports at the bottom, along with JSW Steel and SBI. PSU Banks facing some bit of pressure in trade today, and SBI is a pick on that count. But that's how it's essentially playing out. 30 advances to 20 declines really. And let's look at the larger market breadth as well. While I'm at it, the larger market breadth largely 1200 to 933. So it's not a bad breadth by any stretch, but it's definitely not the kind of breadth we've gotten used to seeing. And that's how it's playing out. Let's look at the mid cap and the small cap indices. Definitely some bit of outperformance on both of those. A 50% higher on the Nifty mid cap, the small cap around 1/3% higher. So marginal outperformance, but you can see that even both of those indices pretty range bound in that sense in trade. Let's look at sectors, and the Nifty Bank absolutely flat, and therefore no contribution coming in from that particular heavyweight. Let's see where the IT index is essentially stacking up flat on that count as well. So no contribution from the heavyweights, both on the IT as well as the banking count. As we did see, NBFCs were ruling the roost on the Nifty 50. But that's how it's essentially playing out. What's doing well? Auto is 0.5% or thereabouts higher. FMCG is participating in trade today. The PSU banking index is keeping a bit of a lid where the Nifty Bank is concerned, and that's probably what is weighing down on the Nifty Bank, because the private banking index largely flat, slight positive bias. The BSE 500, some buzzers in trade. Before we go on and start taking calls, PNC Infra stocks are doing ever so well in trade today. So PNC Infra benefiting from obviously order wins coming through. You have something like a VST which is doing well, popping up on the top 10 gainers in the BSE 500 list. Definitely something to look out for. Jubilant is up 7% as well. And Ircon is doing fairly well in trade. What's not doing well? CEAT, PNB Housing, CCL Products, well, hike in coffee prices, keeping a bit of pressure on that stock. But let me, so here there are some open interest gainers as well that we have for you. JK Cement, there's some bit of long build up there. Avenue Supermarts, shorts building up, 2.8% lower. Goldman Sachs note suggesting price discounts in their stores and on their products. They're gonna, in fact, hike price discounts, and EPS estimates cut by 6%, both for FY25-26, 4% for FY25, 6% for FY26-27. That's how Avenue Supermarts is playing out. CAMS, some amount of longs building up there, and you're seeing similar trends in Macrotech as well as the Almia Bharat. Among the losers, short covering in Kalyan Jewellers, LIC, there's some amount of longs unwinding happening. Syngene International, also you're seeing some bit of short covering. Sona, BLW and Metropolis are the other two where you're seeing some bit of longs unwinding as well. But let me first go on to Kush. Kush Bora from kushbora.com needs no introduction. Kush, talk to us about what's transpiring, what levels are you looking at? Range bound market, right?
Hey, hi Harsh. First up, a very good afternoon.
Very good afternoon.
Fun to be doing the closing show from the studios, right? Slightly a different experience for me, but enjoying nonetheless. I'll take this consolidation, in a very healthy manner for the markets. We've had 2 weeks of good volatility, and that thankfully on the upside. Then we're consolidating with some mild negative bias, but I wouldn't take it as a very negative for the markets in general. What's helping the cause today for the bulls is that for the last 3 sessions we've had this lower high, lower low formations, which has got negated indicated today, and it was perhaps on the card. So as long as the markets respect the 50-day moving average, and which they have for the last 3 sessions, even yesterday's low was just above that 50-day moving average mark. So as long as we stay in that 24,300 to 24,500 kind of a range, consolidate there, you will see a lot of stocks, do a lot of good things. And we've seen this market to be a more stock-specific market. So I'll take this, action right now. And who knows, maybe the markets are saving all the fireworks for the weekly expiry, which is lined up tomorrow. So perhaps, you could see some volatility tomorrow. But as I said, as of now, as long as 24,450 is held, I will be bullish in the market, even on Nifty. It's just that, you might want to have some patience for a breakout above 24,800.
It's a lean month and it's a mean month, Kush, because you will likely see lack of FII action in markets, if I can call it. It's a December month, and we're just about a week or so away from the festive season, which will start for FIIs. Talk to us about, you've suggested you'll be bullish if 24,450 is held. Where will it go thereafter, given that FII action is going to be limited? So Harsh, 24,800 is the first, line in the sand, on the upside that we're looking at. That was the high 24,850 odd, that's where we'd already hit. So that's the level that I will look for on the upside. Once that is taken out, my view is that 25,000, 25,500, 25,100 zone rather, is where Nifty should head. Now, that's where the real litmus test of this up move rally, will come in. And I'll tell you why. Maybe our memory is a little short term, but we've had a big fall, about 10% fall, in the recent past. Either this is a rebound rally in this kind of a fall that we've seen, or maybe this is a reversal and we're going higher. For me, that litmus test will be above 25,000, 25,100. That's the congestion zone that the Nifty's had for a while before it sort of broke down. So I do look at it positively, but the levels for me on the upside or for Nifty are 24,850 and then 25,100. If that is taken out, then I see the indices moving higher as well. But these are the two levels on the upside that I will watch for. Very interesting. And your call on the Bank Nifty before I start speaking about fundamentals?
Well, have been positive on Bank Nifty. I'll also take heart from the fact that, the Bank Nifty is now starting to make a range which is higher. So there's been a very clear range shift on the Bank Nifty. But on the downside, you're seeing 53,000, 53,300, that band acting as a support zone for the near term. And on the upside, you've got 53,800 to 54,000. My, the way we're looking at it, my reading is that, with the positive crossover that we're seeing of the 20-day and the 50-day moving average, also if you see the PCR in a fairly neutral territory and with, a negative buys, a lot of stocks trading, I think Bank Nifty is headed for 54,400, and once that is taken on 55,000 as well. My preferred index for going long for a while has been Bank Nifty, continues to remain so. You could now shift your stop losses for a positional trade to 52,900.
Okay, so more constructive it seems on the Bank Nifty rather than the Nifty. Avinash, let me come to you. We also have Avinash Gorakshikar joining us, Profit Mart Securities. Avinash, let me come to you. What do you make? Is this a healthy consolidation of sorts which is playing out in markets? Give us your take on what's happening.
Yeah, I think good afternoon.
Good afternoon.
I think my sense is, yes, the markets are consolidating, and I think typically a lot of stock-specific activities are being witnessed in the market. Broader markets, I think, will remain in a very close range, as you mentioned in your earlier point that stocks like PNC Infra, NBCC, real estate companies like Anantraj, these are companies where I feel that the growth propensity is going to be more faster in the second half. And order wins have been very, very strong. I think the management commentary for all these companies has been pretty solid. You were talking about PSU banks. So on the PSU basket also, we have been quite positive. We consider, stocks like Bank of Baroda, Canara Bank. These are banks where I think most of the negatives are built into the price already. And I think October to December, which is a busy season for banks, I think you could see a much stronger Q3 number as compared to Q2. And hopefully, the festive season was good. So despite the fact that the rate cut did not happen, my sense is that despite the rate cut not happening, I think, on a core operational basis, I think PSU banks seem to be well positioned in terms of the risk reward. And Canara Bank, trades at not even one time its book value. The book value is about 103, 104 rupees. So I think clearly, the bank's asset quality, the loan book growth, the kind of disbursements which we see, which are likely to happen in the next 6 to 12 months, are definitely looking promising. In fact, there are some ground reports suggesting that in the next 3 to 4 months, just ahead of the budget, the government may ramp up, capital expenditure in, sectors like railways, defense, infrastructure, and that is obviously going to give a big push to the banks. So, I think the basket could be largely, these construction EPC companies, real estate companies, and obviously the PSU banks, which obviously would get a flavor of the kind of capex growth, if the government pushes some more projects before the financial year ends. So I think you got to keep your sights on selective sectors. And I think there could be good opportunities to accumulate now. I don't think the markets are going to get into any panic mode. So it's a good time to accumulate quality stocks.
Great, good time to accumulate quality stocks. Okay, Kush, let me get this one out of the way. Your picks for this afternoon.
Two of them, both of them from the cash segment. First is Zentek. This stock has had a good run for the last 3-4 sessions today. Also, it's trading with a gain of about 1.5%. So for targets of 2110 and 2160 with a stop loss of 2020. And the second pick is DOMS. The stock has actually seen a good profit booking and rebounded from the 20-day moving average as it has done in the past, the last few times. So DOMS with a target of 3060 and 3120 with a stop loss of 2930. These are the two stocks for today, Harsh.
Okay, great. Let me though bring on board the management of Orion Pro Solutions onto the show. We have Mr. Ashish Rai, Group CEO, to talk to us about the most recent order win and most importantly, because the stock is up 7.5% in trade on the back of that. First off, good afternoon, Mr. Rai. Good having you here. Want to first understand from you quantum of the win and how quickly does it start impacting your top line?
Hi, so good afternoon. First of all, thanks for having me. Look, I think so for competitive reasons, we don't declare deal values. I think so we typically don't declare wins unless it's at least 40 crores or something. So this one is well north of it. I think the way to look at it is we entered the market in Saudi Arabia a couple of quarters back. In the last 2 months, this is the second large win that we've announced in Saudi Arabia. There is a significant demand when it comes to transformation in the transaction banking space, and we've sort of more or less established ourselves as one of the top choices for banks looking for partners to bring in the next generation solutions in that space, right? So I think it has to be looked in that context. I mean, there's a continuum of wins in the market. It's a very important market for us. In terms of top line impact, I think it's a significant win. We start off, the project works usually immediately, so probably you'll start seeing some of the impact in Q4 itself, and it would be a material impact over the next, I would say, 12-18 months.
Right. And okay, so let me put this differently. You've guided for a 30% growth in FY25. One, how do you look at that number now? Do you expect that number to have possibly gone up in some form or shape? Is it likely that you'll up your guidance, you'll close higher? Second is, what's the growth outlook for FY26 and 27, given this order win as well as others that are in the pipeline?
Okay, so the way I would look at it is this, Harsh. We've guided to a growth number north of 30%. We will deliver a growth number north of 30%. I think we'll fall somewhere between 30 and 35, maybe closer to 35. We're not going to start revising our guidance numbers on the basis of a win. I think we've just in the transaction banking space alone, I think in the last 12 months, we've probably announced 5 or 6 new logos. So we are very competitive in the space. We are winning. It doesn't materially change the guidance number, probably puts a little bit of an upward bias, but we feel good about delivering north of 30%. The way to look at the longer term numbers you pointed out to 26, 27, I would say look around 2 different vectors. One is, now we've been delivering 34-35% sort of growth for the last 4 odd years. We feel good about continuing to grow strongly around similar lines in the sort of near to mid term. The second way to look at it is we have a stated ambition to be, for our Vision 2030, a top 3 global player in each of our chosen spaces, which obviously means we to meet those ambitions, we need to continue to grow strongly for a fairly long period of time, right? So we feel good about the demand runway we feel we've established ourselves as one of the most competitive solutions in the space. In most of the spaces we've been, our goal is to build absolutely top tier IP, build out sales channel more and more globally. We expanded into Middle East, we expanded to Southeast Asia. Now the goal is to expand into Europe. We expand into US also, and that's growing quite nicely, right? So establish a channel that can take us globally, establish partnerships which can take us globally, and continue to sort of grow strongly for hopefully a long period of time.
Great. If you can also give us perspective, Mr. Rai, how long generally when you win an order, what's the kind of tenure on some of these orders? You're suggesting an order book of roughly 1150 crore at the end of Q2. I don't want to probe you on what you're sitting on right now. We'll await that at the end of Q3. But in that context, how important is and how much of that sits in your orders section and how much of that gets translated to revenue? How does this work?
Yeah, so look, typically in a software, enterprise software space, we normally sell out 5-year term licenses. Sometimes it may be a little bit more or less, but by and large, it's 5-year licenses. But typically, banks don't buy for a duration of 5 years. Most of the banks who bought from us have stayed partners to us. Some of the largest banks in Asia over 15, 20-year periods, right? Because these are significant investments in technology. Once you make the investments, you don't really want to change them unless there is a real reason to. So typically, most of our relationships run, I would say, between 15 and 20 years. What is the revenue impact when we bring in a new customer? I would say the first 12, 18 months while we are taking the customer live and bringing the licenses in, I suppose the impact is a little bit higher. And then relationships move into a steady state phase where you still have maintenance streams coming in and upgrade streams coming in, etc. Right? So typically, I would say if we sign an order, let's say 50 to 60% comes in the first 18 to 24 months, and then it goes into a steady state period, and normally will stay with the customer 15, 20 years.
Got it. And therefore, you're currently at trailing 12 months top line of roughly 1,000 crore. You'll go to maybe in the next 2.5 odd years, you'll be at 2,000 crore plus. Is that the correct way to look at it? And margins at steady state would be around 20 to 22%. Would that be fair in terms of assessment?
Yeah, probably. So that's a good assessment actually, Harsh, right? So we normally would stick to between 20 and 22% on the margin. We believe that is the right level of EBITDA margins to drive in the business. If we keep growing the way we are growing, I think your numbers are correct. So this year we are guiding to a number between 1150 and 1200. We feel good about getting there. If you keep growing at, let's say, 30%, for the next 5-6 years, I think you'll probably be 4 or 5 times the size, right? Like we have been in the last 4 or 5 years, right? So I think, broadly, if we continue the trajectory, it would be around there. We don't give forward guidance that far out. We normally plan for the next year and do come back to the street with a very firm band in which we'll operate. The pace at which we are going, I think it's important to understand, it's very hard to calibrate down to a fine percentage exactly what it is, because you're building out a lot of new products, you're expanding into a lot of new geographies. So that's why we like giving a band instead of a wider band instead of a firm number, typically a 5% band on revenue, which is between 30 and 35. I think we generally feel good about operating there. And 20 and 22 is sort of the right band on the EBITDA side.
Right. And Ashish, would it be fair to say that your entire revenue or close to your entire revenue of 1,000 odd crore would largely be on an annual recurring revenue kind of basis? From what we've just spoken, you said 60% of it translates in 12 to 24 months, and thereafter pretty much everything is annual recurring, because that will keep coming in, right? Your clients are 15, 20-year clients. That's the kind of tenure you look at. Is that the right way to look at it?
I think it's sort of, I would nuance that a little bit. I think the way this works is a lot of the committed revenue under contract, you're right, comes from the recurring or near recurring streams, but then you are growing the business at 30-35%. A lot of the new growth comes in from the newer streams that you are adding, right? So I don't think it would be a fair characterization to say all of the 1,000 crores comes from recurring. I would say something between 60 and 65 ends up being recurring or near recurring streams like ongoing services and stuff like that. And I think the rest of it you do need to sell and deliver in the year that you're talking about, and that's where the sort of a lot of the growth comes from.
Fair point. Right, Mr. Rai, thank you so much for joining us, and many congratulations on this new order win. Of course, stock on a tear on the back of that.
Thank you.
Right, Kush, let me come straight to you. How does this look on technicals? 7% higher. Constructive on this one? Are you positive?
Oh, absolutely. In fact, the stock's already been a multi-bagger. It wasn't too far back. Early 2023, when the stock used to trade about 150, and it's already, about at 1800 odd levels, it's already been a multi-bagger. Still going strong. However, if you see, the stock's got a trend of correcting anywhere from about 20 to 30%, off from the near-term highs, and then making that rebound. If you see the recent drop as well, that came, somewhere in the month of September. From there, also the stock's corrected just about, 25 odd percent and then recovered from there. So that's a very predictable sort of a pattern. Nothing's predictable in markets, but you get the idea, right? A very familiar pattern. Now, with that kind of a history in place, the stock actually now is on the way up. 1975, 1980, that's the recent high that the stock has made. I wouldn't be surprised to see the stock go to those levels and then jump higher from there, perhaps even for targets of 2200. So for me, this is more of a positional play, has had a very good run, and along with some dips on the way. So that's also a very healthy sign. Any kind of support zone that someone's looking for should be close to that 1600 mark and play for targets of 2200 and higher.
Okay, interesting. How do you find this one, Avinash? You're seeing this stock trade at roughly 60 times price to earnings trailing 12 months. Very, very good 20% plus return on capital employed. How do you look at this fundamentally, and would this at all feature, because it's a high growth stock, software type company, selling to BFSI, good solid client base as well? What's your sense?
No, I think, Harsh, just to tell you, about a couple of years back, we had suggested this stock. So, it's one of our very strong kind of performers. We suggested the stock at around 350 odd levels, and our clients are still holding on. I would suggest that, this is a stock where the company's IT, kind of architecture and the kind of solutions which it offers to banks. And specifically, they are not categorized as large IT players which offer, IT services. So I think they operate in niche areas, and that's where the beauty is that, they have been managing to maintain EBITDA margins of 22-23%. And the order book is going to be extremely solid. As you heard from the management, they are looking at having a more aggressive exposure in markets like Europe, US. Of course, in the Middle East, they already have a large exposure. So I would suggest that in the next 2 to 3 years, the growth journey is going to be even more solid. So I think just broadly looking at the price earning multiple of 60 times may not give you the right assessment. But somebody who's got a 2 to 3 year kind of perspective can definitely think of adding the stock maybe on declines. Today, the stock is up by 6-7%. But I think if you probably get a chance to accumulate the stock on declines, I would not be surprised that further earnings growth could be at least 20 to 25% for the next 2 years. So, that could be the key, stock driver. So we are positive on the stock, but obviously on some decline, not at the current levels.
Okay, buy on declines. Let's switch focus. KP Group has secured 300 megawatts solar project in Gujarat from Coal India. Here's what the chairman and managing director shared about the company's plan to complete the project in 1 year. Listen in.
KPI win the order of CIL from the central government order for the Khavda solar project, and it order is 405 DC and the 300 AC project, which is the highest and biggest order for the KPI till date in the EPC, or you can say the CPP segment, which create the revenue for the KPI for the next year is 1311 crore rupees, which will be very lucrative for us, and very enthusiastic. Team is very enthusiastic to do this project within a timeline of 12 months, which they have already mentioned in that. We will try to do it early, because we are already doing this in Khavda 240 megawatt IPP, which we are going to charge by March. This is our expectation. So it is very easy for us, and team is already deputed there from last 6 months. So it's very good for us, and we are looking forward more orders in Khavda also.
Avinash, fascinating with regard to the returns that KPI Green has given, and I want to read this out. 1 month returns of 8%, 6 months down 11%, but year to date up 71%. This is how the KPI Green chart really looks. I know you're not a charts person, but for an investor, so much fluctuation can get tough. Would you buy at this point KPI Green? What's your view?
Well, I think again, Harsh, from a longer term point of view, you must realize that KPI Green has been one of the pioneers in generating power from solar and supplying it to the grid. In fact, they have a very unique business model that apart from doing the normal EPC projects, they generate their own power. And that's the reason the market has liked this business model immensely. Generating power is a very profitable business, and KPI Green actually started it much earlier than the others. Their expertise is basically the engineering skill sets and the execution qualities which has seen this company grow quite aggressively over the last say 3 to 4 years. The order book is very strong, and I think looking at the kind of government focus on solar and the kind of incentives given by the government, there are many corporate users which are now shifting from the normal grid to the solar power, because it's not only cost effective, but it's become a very established norm. So my sense is that somebody who's got the next say 18 months in perspective can definitely look at it. The stock currently trades below its QIP price, because I think the QIP price was close to about 1,000 odd rupees. So the investors today are getting a chance to buy into a company where large institutional investors have entered around 950,000 odd rupees, and where earnings growth is going to be pretty solid for the next couple of years. So yes, I think from a medium term perspective, I think worthwhile looking at it, because this space is going to offer a lot of headroom for growth, at least for the next 12 to 18.
Okay, plenty of headroom for growth in this one. Very constructive, Avinash. Well, time to slip into a very short break. Stay tuned to NDTV Profit as we roll into the last hour to market close.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes,
Back with India Market Close right here on NDTV Profit, and the intraday of the Nifty should come up on your screen. Just to highlight that while Europe is lying absolutely flat in trade, we're not doing too different either. Actually, speaking of Europe, let's bring up the European indices once just to show you what the world markets are up to. And it's not been a very rah-rah performance and not anticipated ahead of the decision from the US or the CPI data from the US, not decision really, the data. You don't expect too much of movement in any of the world markets per se. Yes, FTSE may be down, but the others are absolutely flattish. Get the heat map up on the screen from the Nifty, and you'll just see almost a similar kind of performance through the day. The only thing is that there is a more green than red It was even Stevens. Now what's holding up? Bajaj Finance, a day after the analysts meet, 3% higher, some positive notes, including Citi, and we'd spoken about it in the morning. FMCG has had a bit of a bounce, consumption by and large. So you see a Britannia, you see an Asian Paints, you see a Trent, all of those have done well. So it's a mixed set of stocks, but broadly, a lot of gainers, very few losers. Adani Ports down 1%, a bit of a surprise there. JSW Steel, HCL Tech, SBI all over the place, and Reliance continues to have a bit of pressure as well. So that's the long and short of the large cap end of the market. Tamanna, maybe the quantum, not maybe really, the quantum of moves though that's happening at the extreme small cap end of the market, not the mid cap, but the small cap end of the market, are very, very punctuated.
Yeah, and you're absolutely right. Either extremely high or extremely low. This is a little stable, but I think the Bajaj Finance move is definitely heartening, and you're seeing Shriram Finance also follow through. Let's quickly look at the advance decline ratio before we move ahead. And see what the overall mood is. Yes, you have the gap narrowing, but advances more than declines, which is always a good sign. And we'll quickly look at the sectoral heat map before we get to the individual stocks that we're tracking this afternoon. FMCG, and that pullback on FMCG is definitely interesting, as is the auto pack. PSU banks showing a bit of pain, and you'd expect banking stocks to do well. Just an alert over here, you're going to be hearing from the new RBI Governor Sanjay Malhotra at 3 p.m. So in about half an hour from now. So stay tuned for that. Of course, you will see all of that live, and what he's saying here on NDTV Profit. Let's get to specific stocks this afternoon, and I want to start with PNC Infra. You will be getting a bull versus bear account of PNC Infra. What is this company about, and why is it up about 14%? So they have completed an order for Uttar Pradesh government, a highway project in advance. So a little earlier than advance, they'll be getting a bit of a bonus on that as well. But does it warrant a 14% jump up? We'll be talking about that anyway. That's one stock that's buzzing today. So are railway stocks. Now, could be a host of reasons. There was some news flash wires today about how capex will be revved up in the second half of the year. So you saw Jupiter, Titagarh, IRFC, IRCON. Look at that entire pack doing great this afternoon. On the downside though, on the sell side, look at ITI. Profit booking since this morning, that has deepened a fair bit. So 7% down on an ITI. Avenue Supermarts, and we highlighted this for you. We need to look at this really carefully, because Goldman Sachs sell call is fine, but the reasoning for it is something that leads to a bit of alarm for a player like Avenue Supermart. CCL Products is the other one that I'd like to highlight. Coffee prices have spiked, and whenever we speak to the management, they say, okay, so then we just pass it on. But will there be an impact beyond a point right now on a CCL Products? At least the street think so this afternoon. So quite a few movers there. Neeraj, Harsh, the broad outline is maybe not too much action on the indices, but the broader market is showing its own stories there.
And let's take that forward with Shivangi Sarda of MOFSL. Kushbura, of course, stays with us, as does Avinash. But all three of you, of course, very good afternoon. Now, Shivangi, I want to start with you. How are you approaching trade this afternoon? Let's say, for example, it's a crucial day. There's some data coming in from the US and 2 days of trade left in India. What do? Do you trade any of the indices, or are you staying very bottom up?
Very good afternoon, Neeraj. Thank you for having me. So we've seen that there has been a consolidative phase for Nifty and Bank Nifty for that matter. So there has been a good base formation here. No grave downside that we're looking at from these levels. And there has been a comeback of the bulls. Now, even from the start of the session today, we have seen steady buying, very slow but steady buying. Overall, range bound is what we're expecting for the index, but of course, exciting times ahead. But the good part is that India VIX has cooled off, which clearly comforts the bulls out there. And there has been an increase in the open interest positions of the put writers, which also, concludes that a good base formation has been done here. It's trading above its key exponential moving averages as well. And, we are expecting 24,850 immediately, and then 25,000 marks for Nifty. Of course, it's going to be a little positive to range bound, and 24,400 as a support here. So one could go for a strategy-based, trade over here to play the upside swing, but also remain hedged here. So this will be the take on Nifty. Now, on the other hand, of course, Bank Nifty has also seen a similar consolidative phase from the last 4 to 5 trading sessions. But the good part is that heavyweights have now started adding long side positions, and there has been good buying interest, even though it has been a lackluster, few sessions. So overall, 54,000 is what we're looking at immediately for Bank Nifty with a support of 53,150 zones.
Okay. And Shivangi, what about your ideas for this afternoon?
So stock-specific idea first on my radar is Muthoot Finance. We've seen that this stock is gained momentum in the last 3 trading sessions. Good amount of volumes have been added here. On the monthly basis, we've seen a breakout, and it surpassed its previous hurdle of 2080 levels, and comfortably all set to trade in a new price territory. Now, the good part is that there has been, a good RSI positive divergence here as well. So recommending a buy here with a target of 2150 and a stop of 2020. And the second pick on my radar is CDSL. All the exchange-related and depository counters are looking quite positive. This stock specifically has moved in an upward sloping channel from the last 20 months with a fresh breakout right now. Year-on-year basis also, this has been an outperformer, moved up by more than 100% till date. We've also seen that there has been a consolidative phase, and then the stock has even shown follow-up buying after the breakout. So overall looks quite positive. And in fact, the entire broking space, if we talk about, or the exchange-related counters, if we talk about, the notional options turnover has increased with the scale of scale up of co-location servers as well. So overall looking quite positive, recommending a buy here with a target of 2,000 and a stop of 1880.
In another space which is buzzing is railway stocks. And Avinash, I just, is it that season? Are you going to see some of railway, defense, all of these spaces buzzing ahead of the budget? And are you seeing any reason for the kind of excitement in railway right now? Would you want to nibble in this sector?
Yeah, I think as I was telling Harsh earlier, that the government is likely to make some big announcements just ahead of the budget. I think before this financial year ends, and I think railways, defense are 2 sectors where I believe the government is going to possibly announce some new initiatives, which is going to give a further leg up to the sector. As far as railways are concerned, I think almost every company, whether it is the wagon business or the Kavach protection system, or typically any ancillary, I think all of them are sitting on a very healthy order book. But I think we feel that the wagon companies, Tamanna, look to be very promising because there's a supply constraint here, and I think demand is growing. I would not be surprised that in the coming budget you could get a further fresh kind of booster from the government in terms of the new tender for wagons. So here I think Texmaco Rail and Titagar, these are 2 companies which we feel have got good scalability potential, and I think it's a very closely held market. Just about 3 or 4 players which control this market, and therefore margins are going to be very solid. Most importantly, companies which have got a decent amount of capacity are going to obviously benefit from this operating leverage which kicks in because of the incremental orders. So I would say that the wagon business is more promising, and I think across the sector, I think you're seeing a lot of buzz because markets are expecting that the government could announce some major kind of further plans here, which could obviously propel a lot of demand for a lot of ancillary as well as for the frontline companies here. So I think net, yes, things look quite positive. But yes, I think investors should take a slightly medium to long term call here because these are well developed and well established stories. So at these levels, I think you need to have a little bit of longer time frame to get a decent kind of risk reward in your portfolio.
Okay, let's just take a second to look at the 3 stocks on our radar, the top buzzing stocks at this point. Varsha joining in with what is moving this afternoon. I would say at least compared to yesterday, Varsha is not as quiet today. Some action that we can see, and what's on top of that list?
Yes, Tamanna. So starting with HG Infra Engineering, where the stock is buzzing on the back of letter of acceptance that the company has received for rupees 763 crore from Ministry of Road, Transport and Highways, and the contract needs to be executed in next 2 years. And also they're targeting an order inflow of around 11,000 to 12,000 crore for FY25. Recently also they emerged as a qualified bidder for 250 megawatt tariff-based battery storage system, a project by Gujarat Urja Vikas Nigam Limited. Then I have BEML, wherein so they've got two contracts. One is 136 crore contract from Defence Ministry for high mobility vehicles in the battlefield surveillance system, and yesterday post market hours they received an order worth 83 crore from Ministry of Defence to supply 50-ton trailer for transportation of battle tanks. And with this, if you see as per September 2024, the order book for this company stands at around 11,500 crore. And lastly on my list is Karnataka Bank, which is buzzing as the bank has launched its first retail asset center in Bangalore. Now this RAC, that is Retail Asset Center, will centralize key functions to streamline their retail loans and improve efficiencies, and the company is aim to faster loan processing, competitive pricing and significant retail loan growth.
Okay, thank you for that. So Karnataka Bank is one of the ones that we should look at. Any of these that you're tracking this afternoon, Kush?
So incidentally, HG Infra and BEML did pop up on our systems, on our radar as well, on the metrics that we track, but haven't really generated that into a call. Also, Karnataka Bank, has reached its concession zone. So if I were to pick one of these three, I would still pick BEML because there was a gap, around the 44.30 mark that has been taken out. The stock is inching higher. The volumes have also picked up in the last couple of sessions, not just today. So if I were to pick one, I would pick BEML for positional targets of 46.75, and once that is taken out, a 48.50 as well, and a stop on this one comes close to 4300.
All right. I think the big story, of course, is as we wind down this year is what the year ahead looks like, and a great report out there by Axis Bank which says turbulence globally but drivers remain local. We're speaking now with Neelkant Mishra, Chief Economist at Axis Bank and Head of Global Research. Neelkant, pleasure as always to have you on NDTV Profit, and thank you so much for your time. I was going through parts
Thank you for having me.
Absolutely. I was going through parts of the report, and I think when you talk about global turbulence, let me start from there, and then of course we'll get to the India impact. The biggest factor of turbulence or the unknown perhaps is what the new president in the US will do? And is there any way to assess whether that will be a negative or a positive?
No, I don't think so. It is not going to be very easy to on whether this is negative or positive for India, but what is likely to happen is that it will increase the noise levels in the markets. It will increase uncertainty of future, and what that does is it starts to slow down activity globally. So starting with his inauguration on the 20th of January, I think we all need to be on standby on the nature of policies that he pushes through. Remember that this time he's going to be much better prepared than he was the last time, with his own team in place, with having some lead time in deciding on policies which will not be stalled by the two houses of legislature or even the courts, and therefore the likelihood of them seeing the light of day are very high. But at the same time, remember that the second and third order effects are also going to be very important. So if he starts with a trade war against China, remember that since 2016, global growth in exports ex-China and global growth in imports ex-US have both been pretty abysmal. So if both these parties are starting to start a trade war, it can be quite disruptive. What can also disrupt is the currency levels. So if the RMB was allowed to depreciate, and remember that in the last year or so, we have seen several steps from the Chinese government which suggest that they can allow the RMB to depreciate. So they've recently changed their stance from prudent to accommodative. They have also allowed the central bank several months back to start monetizing government debt if necessary. So there are several steps that can be very interesting in terms of second and third order effects. But at the same time, let me not just highlight the US presidency, or at least the first 2 months, say, of President Trump. But there are also interesting things happening in Europe. Europe had a very weak 2024. There are significant political changes likely. So Germany is going to the polls. France is going through its own turbulence. The spread between the bond yields of France and Germany is the highest we've seen in a while. And so that's leading to some expectation of what the ECB may do. In China internally, there is a risk of deflation. So there are lots of interesting things that are going to happen globally. But as you highlighted from our note, the trend of growth in India is still likely to be driven primarily by local factors in our monetary and fiscal stance.
Of course, and that is, I would say, the core of the India story. But just to take that forward, Neelkar, and I wonder if this is a optimistic view and whether you share it at all, between what could be a potential trade war and the US on one side, China on the other side, the globe shaking up, geopolitical tension which is still continuing, no signs of easing. Is it correct to say that India is standing out as a safe haven, domestic stability, relative economic stability while all of this is going on?
I think so. So I think the growth rates in India, and so this is of course expecting that the necessary fiscal and financial interventions are underway and they should support growth back to the trend level. I do think that there is sufficient internal demand in India for India to maintain a 7% type of growth level. With a much stronger reserves position, it is a lot less vulnerable to external shocks through the currency route. Though I must say that it would be prudent, in our view, to allow the currency to be a lot more volatile than it has been. It is currently among the least volatile currencies in the world. It has to start becoming more volatile so that the economy is better prepared and the RBI is not incurring all the costs of currency stabilization. In our dependency on external capital, so already the current account deficit that we are sustaining is close to 1%, which is way lower than the 2.5% to 3% what we used to target 15 years back. So on many measures, I think we are much better prepared than you used to be in earlier rounds of global volatility. And if we manage the fiscal and monetary side well, I think our growth should be quite good as well.
Neelkant, good afternoon, Neeraj here, and thanks for speaking to us. What are the risks, that you look at? Are these, or would these largely be external risks for India in 2025 in terms of global growth, etc.? Or could it be internal as well? Currently we are grappling with China dumping, flows out into the US, multiple things, all of which seem external.
Well, there is some merit in what you say, but I think that the growth slowdown that we have gone through, and therefore the negative impact on the market, is all internal. So, see what we saw in, say, the FII outflows, right? So when US 10-year yields bottomed out at 3.6% in September, and then rebounded to 4.4 plus by mid-November, there was a wave of outflows from emerging market funds. And so the $10-11 billion that we saw going out in October was 0.2% of our market cap. There were several other economies that also saw similar outflows. In fact, on a rolling 12-month basis, Vietnam has seen 1.2 percentage points of market cap worth of outflows. In India, we are still positive on that count. So the reason, but the market performance, so despite the fact that the extent of outflows as a percentage of market cap was not exceptional, the performance of Indian market was among the worst among all emerging markets. And I think the reason for that was that our growth expectations were being revised down, and we went through a spate of over 4-week period of very brutal earnings cuts as earnings persistently disappointed. Now, so the bigger question is, why did that happen, and were the factors external or internal? So while There are issues with excess Chinese capacity. There are sectors like chemicals or metals which are very badly affected by Chinese dumping. But at an overall economic level, the growth slowdown that happened to 5.4% in the second quarter was primarily driven by an unintended strong fiscal tightening, which is now reversing because that was not what the full year number was supposed to be. And secondly, and equally importantly, a very sharp slowdown in credit growth. So if your system credit growth slows down from 16.5% to say 11 to 12%, that's a substantial level of slowdown. Now, some of it was intended, the unsecured loans and the MFIs, but that's a very small part of the overall market. It was because on the quantitative side, there was not enough money in the system. The fact that, because the structure of the financial system today is very different, the tier 1 capital that the banks hold and the equity that the NBFCs hold is way higher than it used to be. And therefore, the thresholds for loan deposit ratio at which the central bank started to ask the financial firms to slow down their credit was perhaps not right. And therefore, when you see a very sharp slowdown in credit growth and unintended pace of fiscal tightening, which was quite extreme, it is bound to be result in a very strong negative surprise for GDP, and that manifested itself into the earnings cuts that we saw.
Okay. Therefore, the question that comes to mind is the near term, let's say, because included in Outlook 2025 would be a case of whether the capex, which is kind of stalled, is the government spending already and will it spend more in, let's say, Jan, and will therefore, yes, the second half will look more balanced than the first half, but could there be a sharp uptick, or would you rather it not be a sharp uptick, even if it can be?
No, I think it is likely to be reasonably sharp uptake on the fiscal side, on the monetary side, on the financial side. I'll explain what
also
I mean.
On the capex side, what I meant to ask.
So let's see the fiscal numbers first. Yeah, capex. Yeah, so see, actually, capex or revex or revenue expenditure is it's relevant at the second level. The first thing is whether the quantum of spending is happening or not. So in the first half of this fiscal year, the central government incurred about 29% of its full year fiscal deficit. In the 10-year median, in the first half is 62%. So there is a 33% of fiscal deficit, which normally would have been incurred but was not. Now, 33% or 4.9% of GDP is 1.6% of GDP. That was the extent of unintended tightening squeezed into 6 months. So if you were to annualize it, the numbers are much bigger. Now, so this is really strong pace of consolidation. Now, if the government was to meet its 4.9% of deficit fiscal target, GDP fiscal deficit target, the expenditure has to be in excess of receipts in a meaningful way in the second half. In October, we have already seen signs of that. So the first objective has to be to incur that deficit, because from a macro perspective, higher deficits mean support to growth, lower deficits mean a headwind to growth. So the first is to actually spend it. Where capex and revex start to make a difference is in the multiplier. So whether you use those 100 crore rupees to build a road or to give it to someone to spend, in the first round, the money spent is 100 crores, because even if you're building a road, you are buying bitumen and labor and leasing equipment and all that. Where capex helps is that the second and third year impact is also meaningful. Once the road is built, it improves productivity and all that. But at this stage, I think the first target and then the first monitorable for us is what is the extent of the fiscal deficit. Now, you're right that the capex is where the money is best spent. From what the government machinery is talking about in the public, out of the 11.1 trillion rupees, they're saying that they should be able to spend about 10.5 trillion rupees. The slippage is mostly going to happen in the in the interest-free loans for capex to states, where the states may not draw down some of those, especially because of some of the conditions imposed. So, but otherwise, I think the government spending is going to be meaningfully higher, and some of these tailwinds, I think, will. It's not that the impact of this spending is felt only concurrently. Some of these tailwinds that will actually push us through maybe the first half of the next fiscal year as well. So I expect that the rebound in high frequency indicators, once the impact of the CRR cut, remember that the RBI is also now addressing some of the concerns that had slowed down credit growth. So like the cut in CRR from 4.5% to 4% normalizes it back to where it was before 2022. And that allows the money creation engine in the economy to start to work again the way it used to. This is high-powered money. So over a period of time, given the money multiplier, it can generate 5.5–6 trillion rupees, and therefore there should be enough money in the system for the banks to start to grow credit growth again. So some of this, I think, will be slow on the financial side, but I think the fiscal, we are already starting to see impact. I think on most measures, October was the bottom, and November onwards, some of the high-frequency indicators are already starting to move up.
Right. Mr. Mishra, this is Harsh Saita here. Quick take on the repo. So your report suggests that repo will remain at 6.5%. Talk to us about the rationale behind that, and also your take on the new governor.
So, see, the MPC, the Monetary Policy Committee's target is headline inflation. And we go into great depths in the report to show why, despite the fact that food versus CPI and vegetable versus food, both of them are at cyclical highs, meaning that you would expect that on a relative basis, food should see lower inflation than core, and within food, vegetables should see, and so therefore inflation should normalize. But the challenge is that these income transfer schemes that the states have initiated, and there's been a significant acceleration this year. So there is about 2 trillion rupees of monthly income transfers now happening to women. 20% of women are getting it. The target for this is the bottom 30–40% of the households, where the marginal propensity to consume is the strongest for food. Now, in segments like eggs or meat or milk, because there is very little of government intervention, and these are very open markets, the supply response is quite quick. In things like vegetables, where APMCs, and there are several constraints around storage, etc., the supply response comes with a lag, and therefore this additional demand, in our view, adds about 6–9 months of demand for supply, and that may take some time coming. And therefore, if the headline inflation averages 4.5 for the year, and that too because the high base effect of the October to December quarter will mean that October-December 25 is actually closer to 4%, means that for most of the year, and including in the March 26 quarter, the inflation numbers could be higher. And if that is the case, then I think the MPC, as per the regulations, I don't think will have the room to cut rates. There is another factor at play here, and which is that if the most you can cut is 50 basis points, see, unlike the Fed, which took rates to 525, 550, and there was at one point an expectation that they could cut by 175 to 250 basis points. If the most you can cut is 650 going to 600, meaning 6.5% going to 6%, I'm not so sure if it is even worth triggering that cycle. And therefore, so long as inflation expectations remain elevated, and if the growth does rebound, so remember that because of the normalization on the fiscal side, the normalization on the quantity of money side because of CRR, as well as, and this is something that we expect has not yet happened, but we do expect that the RBI also will perhaps take a step back on the macroprudential side. So if credit growth really picks up, I think the need for rates to fall even 25–50 basis points will not be there. That's the reason.
Okay, so that's interesting to watch, and thank you so much, Ms. Mishra. We would have loved to chat more, but we're going to hear from Sanjay Malhotra in just a minute from now. So we'll have to end it here, and in fact, that's where the focus is going to be. New governor doesn't mean the policy changes. That we should be clear about. But will we see some kind of a cut in Feb? We'll take a very short break. We'll come back and hear from Governor Malhotra in just a minute.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Well, back with India market close, a clutch of stocks are flying around, especially in the energy space. Devin Choksi of DR Choksi Investment Managers Johnson. Devin, good having you. Thanks for taking the time out. What's your sense of what's happening within this energy ecosystem? Because after a brief lull, we're starting to see some fairly strong moves, and companies are looking very promising. We were speaking to KPI Energy. They spoke of a 50% CAGR growth until 2030. I mean, that's very strong guidance.
Yeah, Neeraj, I think I'm not at all surprised, I think, with this particular guidance given by the company. I think if you look at how the government is allocating money and how the basic, I think, orders inflows are taking place with the power generation companies, in my viewpoint, I think the ancillary companies in all likelihood are likely to ramp up their capacity and further create the ability to supply the demand which is so created. So I'm completely, I think, convinced about this particular game plan which is unfolding for next 5 years. In fact, I think we have still not seen the contribution coming from green hydrogen for the engineering companies. And I believe that I think those ancillaries are likely to produce significantly large amount of business going forward. I think because of the government unfolding, or government is spending significant amount of money. Only point which I am always convinced about, that those companies which are having the capability will be the first one to take the advantage. And that's what I think we are looking around for, I think, as far as investment opportunity is concerned.
You know, apart from that, I just want to get a sense, Devin Bhai, on how you are seeing some of the FMCG counters reverse in mood today. Because obviously after the GCPL quarterly update where, you know, Godrej Consumer and said that they're looking at a tough mid-quarter review, you had every company follow, and you're seeing a bit of a rebound today. Do you just see this as sort of a technical pullback, or some of those concerns are receding? Because we just finished an interesting conversation with Neelkant Mishra, who was very clear that H2 will be better. This is a temporary reason that you've seen this 5.6% figure for GDP last quarter.
Yes, Taman, I absolutely clear about, I think, the second half. I think after talking to so many companies, everybody is confirming univocally that the third quarter and fourth quarter, the supplies are increasing from their side because of the higher amount of demand and the offtake happening in the marketplace. So certainly, I think that is true for most of the industrial companies. It is true for the FMCG companies, FMEG companies, where discretionary, non-discretionary consumption spree is taking place. In my viewpoint, I think many of the FMCG companies probably had to basically face the sell-off in last few days, also because of the fact that I think the plenty of new IPOs are coming. And when I think the investor is not seeing enough amount of headroom for the business in the market, not from the profit point of view, but from the market price point of view, when they don't see enough amount of headroom in the portfolio for appreciation, they are actually booking the positions and churning the sectors. FMCG is one in case. Earlier, auto was the case. So similarly, I think you are likely to see this kind of volatility continuing in the market because the entry of new paper is so high and so huge that there is no choice but to sell some part of your portfolio. That is what we gather.
Devin bhai, between Harsh also joining in, between railway stocks, your infra plays, and I remember we had this conversation on ancillaries, pipes, etc. as well. What would be, in your view, the best way to play this theme?
It's always difficult, I think, to play the theme in this kind of environment when the business is unfolding and unfolding faster. I would rather think that individual companies would make more sense vis-a-vis, I think, the broad, because broader themes are already established. Be it railways, be it defense, be it, I think, the building material segment within the construction or infrastructure. I believe that I think the themes have been unfolded already. Individual companies will have to be looked around, I think, from the investment point of view. Currently, as we see it, I think we don't find enough opportunity because of the high valuations. But from the names point of view, yes, I think definitely the capital goods segment companies are looking interestingly positioned. May not be from the valuation perspective, but from the perspective of continued growth over next 3 to 5 years. So keep an eye on it. If market is kind enough in giving you some opportunity during the sharp fall or kind of a sell-off, which we experienced in October, November, if that kind of opportunity comes, some of the railway defense stocks definitely mean a good amount of opportunity, largely because I think they're well positioned in the manufacturing space.
Stay on with us, Devin Bhai. I think since we've spoken a bit about FMCG, railways, Kush, interesting to get your view on both segments, and both are firing today. Any one of those that you would look at, or anything particular on the charts that you're finding interesting? And I'm talking about, let's start with FMCG. Let's start with a Britannia. Let's look at a Nestle. All of those counters doing well, including Tata Consumer.
So, Tamanna, I would wait out, the FMCG play just yet. I mean, it's been quite a hammering that these stocks have seen. This looks like the first phase of, any kind of revival. Most of these stocks, if you see even now, are trading, below the 20-day moving averages, or, some of their key resistance zones. So I would not be the first one, not a firm believer of the first mover advantage. Let the base get in place, let it jump, let these stocks jump and tell you that, yes, they're out of the woods, and then you jump, onto this bandwagon. So not a big fan of the FMCG play just yet. Quite conversely, a big fan of the railway plays. If you remember, about last month or so is when we've started speaking about some base formation, some uptick, that appears to be coming about in the railway space. In fact, I remember, when the Maharashtra election results were out around that time, we did a small media where we, a social media bit where we said JWL was one of our top picks. The stock's actually done rather well from there, and today also doing well.